So, so you think you can tell heaven from hell, blue skies from pink, can you tell a green field from a ghost? Yo, 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 how we doing today? Happy Monday, everybody.
Happy Monday.
Happy Monday, Dark.
Good morning. Are you guys happy? Are you ever happy?
I'm
Always
absolutely,
happy, Tomer.
Right on.
absolutely, I'm happy.
Right on.
Life is beautiful.
I'm just out on a walk. It's a cool day here, but I'm out on a walk with my dog, so I'm like 10 times happier than sitting on my couch. That's for sure.
Hey, Tomer, great space over the weekend. A lot of good learnings for me personally. I wasn't able to listen in live, but thank you for that.
Oh, listen, my pleasure. That you're referring to the emotional intelligence installment of Bitcoin Philosophy Sunday?
Yeah, I listened to it after I got in a big argument with a lawyer from last week over Twitter, so it was excruciatingly pertinent.
I think I may know who you're talking about. Well, I hope you found it. Yeah, I'm glad to hear that you found it useful. It's on my feed. Maybe I'll get a chance to share it in the nest while we're on this spaces. But now that you've introduced it, I do this Bitcoin Philosophy Sunday for 2 hours every Sunday. And this week, the topic was, what is emotional intelligence? Do you need it? And how does it interplay with Bitcoin and the discourse that we're having on Bitcoin? And I have to admit, it was a really good dialogue, lots of really good learnings. I was able to share some expertise that I have in the field because I used to work in the field. And I'm going to continue to try to focus the next few episodes of Bitcoin Philosophy Sunday on on critical thought and the art of thinking. I would describe it broadly as. So thanks for bringing it up, and I'm glad you enjoyed it.
Yeah, Tomer, put that in the nest. That sounds really great. It plays at 5 a.m. for punchers in my time, so we don't usually get to make it live.
Yeah, 5:30. I managed to push it a half hour later, but I know that may not be the deciding factor for some of you guys. And if my lifestyle changes that I can find a better time to reliably do it at, I will. It's just right now that is the only time in the week where I can really take the hosting for 2 hours of a space is on with reliable consistency.
Yeah, I threw it up there, Tomer. Thanks very much, and it was great. Hey, Dark, can I say something?
Absolutely, Poncher, you can always say something.
You're the co-host, Puncher.
Well, I like to play by the rules. So, real quick, I don't want to go on and on about this, but last Friday, Fridays are kind of like my day to pick the topic or whatever. And I made a decision to block somebody out of courtesy to another guest that I thought was going to be on, turned out not to be on. But I just, in an attempt to avoid confrontation, which turned out to be a bad idea all around, I blocked somebody, and it turned into this big thing. And again, there's a very public feud between these two people. It doesn't matter who it is. And like I said, I made a game day decision to try to block one person. Now, if you block a person, uh, they can't jump on the space if you're like the co-host. So just so you know that. And in retrospect, look, I can take all comers, as can anybody on here. But the point is, you can't really claim the Bitcoin ethos and the non-censorship and then turn around and censor somebody. So it was a mistake. I called that person. I apologized. I think we worked it out. I won't do it again. But that's it. Just wanted to say that.
Thanks, brother. Appreciate you, man. Oh,
Yeah, that's great, Puncher. I didn't realize that that was a thing where if you're blocking someone, they can't join the space. So that's actually really good to know because we do want to welcome all voices.
Yeah, I'll caveat that by like, if you're the XRP guy who's spamming me, you're still blocked. You don't get a pass.
Robert, how you doing today, man? Dollar down, stocks down, bonds down, Bitcoin up, gold up. Your kind of day, Robert.
Yeah, I love it. Good morning. Um, yeah, and the 30-year was 5%, so that's always fun. Um, by the way, in case Joe is here or he preempts me by saying that the 30-year was at 5% a couple times in the past year, growth and inflation were also significantly higher. So we're starting to get into that world where, he talks about growth, being over inflation as really kind of the debt metric that matters. Well, we're getting into debt over the interest rate, the cost of the debt. He always makes that point, and it's accurate. Well, we're kind of in a world in the past, I don't know, 6 months, 9 months, where the interest rate on the debt is higher. Right, the two things are going in opposite directions. Rates are moving higher. Meanwhile, growth is moving down. So it could get spicy.
Yeah, absolutely. Look, Robert, to your point, as many of you know, I've spent pretty much the last 5 years traveling around the country, living in an RV, meeting people in small towns, everywhere from I-90 down to I-10 and everything in between. And one thing I'll tell you is that these small towns, for lack of a better term, are being euthanized. What were vibrant towns in the 80s today are a Dollar General, a dollar store, and a whole bunch of methamphetamine. And it's really sad. When I was young, when I was 16, I traveled across the country on a bicycle, and we took the I-90 route from Seattle to New York, and I got a chance to go into every little town because when you're on a bicycle, you literally go into every little town on your way across country. And I remember, from Walla Walla, Washington, all the way through to Michigan, and all these little towns had single A baseball. They were vibrant. And, having made that trip again now, some 40 years later, it's a very different story, and they literally, I don't know a better term. I saw Adam use the term, but they've been euthanized. And I think a lot of that speaks to your macroeconomic view. So, yeah, I agree with you, man. Like we got big problems. We got much bigger problems with the currency, with the debt, with the actual hollowing out of America than anybody will even dare to admit. And it's very frustrating when I get on spaces with these what I'll call tradfi, Fed supporters. They just need to get out of their town.
Do you mean like Joe?
Yeah, look, I'm not picking on Joe. It's not just Joe. There's plenty of them. I call them agents of deceit, right? Because like they'll tell you one thing. Because look, they never get out of their ivory tower cities, right? Like they live when they leave their city, they go to the Caymans, and then they go, to Tuscany, and they go, from Four Seasons to Four Seasons, and it's like you just need to get out and see what's going on in this country and to understand it. And that I got a call. Yeah, you just need to get out and see what's going on, and you'll have a totally different view.
Hey, Darkside, I was wondering if you caught this thread. I reposted it. It was involving Ray Dalio. I didn't know
Yeah,
if you caught that
yeah.
thread.
Actually,
Yeah, I saw
we
that.
That thread was really interesting. We should talk about that thread because I think Dalio, I haven't been 100% on board with everything he said over the years, but I think this thread was really well timed. And basically, he's sort of saying, look, we are about to see something that's going to appear very bizarre to people because it's going to break the pattern of the last 30 years. But if you look at history, it's not bizarre. It actually happens all the time. These fiat currencies fail. The world order fails. The system fails. And in his view, we are headed into such a failure. And I'd love to dive into that kind of thread because it is to quote Joe Carly Sally, it's a doomer kind of thread, but it's also just a transition thread. I mean, the way you go from one system to another is you transition, and it's really messy.
Well, I think just to pile on top, Fred, to add to the conversation, your space, it was about 3 hours over the weekend. I think it was Saturday. Was really good. I didn't listen to it live. I listened to it after, and man, you guys hit some really banger issues. British was awesome. We can talk about how you don't want to send your Bitcoin back into the hands of Wall Street. You'll never see it again. And there's some other great topics. So hats off to that. If you guys, I'll put it in space. But it was outstanding.
You know, it was interesting. It started off, I couldn't get a single person to join me on that space. And then when I had to cut it off, there was like 1,200 people in the room. But it's interesting. Sometimes these spaces, they start out really slow, but you know, it's sort of we got some great people piling in. Actually, British had some really great posts. I like to pick on British, but you know, the guy does make some really good points. So yeah.
You know, Fred, I saw you running that space. I was gonna jump on, and you, the, this is kind of unbelievable. But you know, I was in Palm Springs for the last 3 days, and I was making one of my Bitcoin one wheel videos, and no joke, one block in front of me, a car bomb goes off and like throws me off the one wheel. All the glass around me is shattering, and like big plume of smoke. I mean, I was fine. People around me were fine, but I think it made national news. But it right in front of this fertility center, right there on the main
Oh
road.
yeah, it did. Yeah, I remember that. I saw that. Yeah, some young guy, kind of deranged, decided to blow up a fertility center. Wow, you were there, huh?
Oh yeah, yeah. I hadn't even read the news, but yeah, I mean, half of Palm Springs got shut down. It kind of sucked, but yeah. Anyway,
And decided to blow himself up too. Apparently, he was in the car with a car bomb.
yeah, there was carcass or something. I thought it was a dead dog. There was, but I guess it was his body.
It's the Darwin Awards.
Hey, I see Josh. Josh, come on up, man. I threw you an invite. Gary, how you doing, brother?
Wow, we're at 105 and we're talking about crazy people blowing themselves up. Bitcoin is so boring, it's unbelievable. Good morning, everyone.
Well,
Good
it's
morning,
boring
Gary.
until it's not boring, right?
I think that's a fair comment.
Change on no notice whatsoever, Fred. It will most certainly do that. Where's the $84,000 Bitcoin? I'm not seeing it, guys. Where's it at? I'm
Uh-oh.
waiting for it.
Josh, come on up, man. They're calling you out.
Wait,
Hey,
It's
Simon,
is
in
how you
is the
it's in
doing?
your
eighty
Good to
old
is
see
the
you.
cross
eighty four
spaces.
thousand is the $84,000 Bitcoin in the room with us right now?
It is.
I don't know.
He is.
I'm
You
still
guys
trying to
got to be
figure out if
careful. I'm
Josh.
Well,
afraid you're
adjusted
taunting
for
it. Don't do
inflation,
that.
guys, and $105,000 Bitcoin is really worth only 84,000 2023 dollars. So
Good point.
Fair point.
Well,
How much
I
does
think we're
it?
going to summon Joe Carlos Ali in a few minutes here. Joe.
Don't do that.
Say
Please don't
say
do
it this
that.
way: the Republicans are MAGA is winning. MAGA is winning. Joe will pop in any moment.
British had the absolute best reply to Joe up on your space over the weekend, Fred. He just said, "You're a Democrat." Of course you.
But
I love that, man. That was too good.
Hey, Cosmo, how's it going?
Yeah, good morning, guys. Excited to chat some Bitcoin. I liked what Scott Bessent posted yesterday on his Twitter. You guys see that? He's talking about growing his way out of this thing, and it just sounds like a big old fat print to me, but I don't know. I'm just a pleb.
You know, it is
Well,
interesting
that's the
how few
thing.
people, mostly the Democrats, never talk about they. We only talk about the growth of the cost of interest, and yet we never talk about the way to solve every problem is outproduce the bloody problem. And I have to believe that what we're trying to do has to be good for America, probably Saudi Arabia, and probably Russia. Like I see this as like an awesome trade getting ready to set up. Uh, that growth will solve this problem. growth in either expanding margins or new growth centers from the U.S. Whether that takes a year or 3 years, I mean, we don't really have 3 years. We got to show shit right now, right? If we're going to turn this thing around, but what could go wrong, guys?
But Gary, what Joe would say is, I'll be Joe a second. What matters, Gary, is nominal growth. And how do we get nominal growth? We print, and that increases nominal growth.
Well, guys, to that point, Gary, how much does it cost to produce a Bitcoin today? What's involved in that, and how much does it cost?
Well, do you own the land and do you control the energy source? Because to me, that's a very different equation than somebody that has to buy energy on the grid in East Texas at the very end of the fucking trade. I don't understand why everyone's focused on the center of the hub. Like, if you go back, if a guy's got thermal energy, literally the only cost to him is the cost of capital to build the Genco, and I think you'd have Bitcoin miners offering the Gencos free. So what does that cost? 30 grand? But it's going to destroy Mara. If Mara's having to produce Bitcoin at 89, what is the cost of mining today for a guy buying fossil fuel, buying power? Does anybody know? It's just 10 seconds.
I heard on a previous spaces that I was on today, so it's just hearsay, but I heard it was close to 100,000 already, given the difficulty. But I may be mistaken. I'm just relaying a message that I heard.
Yeah, but I mean, there's some miners in the group. We should be able to. I mean, I can probably pull some data up right now, but I think they're. I don't know the answer, but I could see people not making money right now.
I mean, it's hard. Like, are you including the depreciation of the fixed cost, the capital?
I'm including the cost, like you and I. If interest is part of my cost, it's part of my cost. Cost of capital, cost of land, cost of everything. Like, how do I run the business, and do I ever make a profit? Mine, look, I own a bunch of miners, so I'm just being honest about. It was a bad trade for me. I've made money. I made a 48% return on these miners. It's been a fucking horrible trade.
Gary Grok given me between 75,000 and 137. So
yeah. I mean, it's not a great business, man. There's so much risk in it, right? But it's not 60. That's the point. And with the risk they take, they should be making 30% margins, and they're not making any margin.
Exactly. Thank you, Gary.
Hey, British, welcome. How's it going?
Good evening, everyone from Dubai. Hope everyone's well. It's going quite well.
Hey, British, over the weekend, listening to Fred's space, you came in late, but around the 2:37 mark, you started talking about the flow of Bitcoin back into the Wall Street hands and how to not do that. But that's exactly what's being set up. Do you mind recapping that a little bit for everybody who wasn't on the space?
Where do I start?
The Genesis block, January 3, 2009.
I think you can start with the river stats showing that individuals are selling their Bitcoin and Wall Street's buying it.
Yeah, River put out this amazing chart showing that this year, 200 and something thousand Bitcoin have been transferred from the hands of institutional, rather from the hands of retail. Let me focus a little bit. I apologize, guys. From the hands of retail to institutional coffers, never to be seen again. And I've been shouting about it for 2 years now, and almost everybody else that's spoken about Bitcoin has also been shouting about it as well. And yet, this is exactly what retail is doing. This is the retail curse. This is why a majority of people will stay poor, and they'll get their Lamborghini, they'll get their house, they'll get their whatever they want, and then they'll ultimately give up scarcity, and they'll give it up to the institutions that understand the value of holding scarcity. And unfortunately, to be quite honest, maybe it was naive of me, but I thought it might be different with this asset. I thought this one asset where you have the ability to actually hold it in self custody, buy it at the same price as the institutions. I thought maybe it would be different when I first started this journey. And I've come to recognize that it won't be. Therefore, my empathy for hodlers, retail hodlers, has actually decreased quite significantly, because it is completely up to you to keep control of this asset. And you are not. The numbers demonstrate that. This is not some fantasy land. You have absolute scarcity, and they will pay you $1 million for it. Because if Saylor is right, and this is going to $13 million a coin by something in the 2040s, if they pay you $1 million for your Bitcoin and you go away happy, you get your Lamborghini, you pat yourself on the back, and now generations of your children starve. Well, they won, because they still get a 13x return. And they work for people like me. They work for people like Gary. They work for people like Fred and everyone else on this stage. They don't work for the average
They don't
person.
work for me.
They do. For they will, Tomer. If you keep holding, they will. And they'll come and beg you to be able to work for you, because that's how these parasites are. And people are giving up their Bitcoin, and that's the sad part about it, Puncher. I hope that's a good enough summary.
No, it's great, and it just when I say I'll never sell, that's what I was getting to. Like once you sell it and you trade the winner for the loser, you become the loser. There's just really no way around it. And a lot of people are, I guess they don't see that. And you articulated it really well. So thanks, British.
Yeah,
Well,
absolutely.
Doc, I'm sorry. Go ahead.
Yeah, I was just going to agree with Puncher. I mean, I think you're spot on, British, and a lot of the loan products that will be coming out will be pernicious, and they'll accept very, very high LTVs. People will end up losing their Bitcoin via margin call. It's all coming, right? Like that. Look, this is a scarce asset, and people want it, right? And I think that's the way you got to view it. If you were walking down the street in Manhattan and you had a bunch of diamonds and you were just juggling them in your hands, chances are someone would try to take them. So I wouldn't look at this any different.
Doc, believe it or not,
Yeah,
if you
maybe
had
maybe
diamonds in your
one
hand
framing of it.
and you were wiggling them around on New York City, because I've seen it before. There's a kid that goes on New York City. He tries to hand out gold to people. Most of the people just walk by. They don't trust the guy. They don't know what it is. They rather ignore him. The smart people, they stop, they look, they see what's going on, they grab the gold, and they go. Just wanted to make that point.
I think one way to frame kind of the situation is, and a lot of these spaces fall into this trap. You can spend a ton of time researching the things that are attached to Bitcoin, right? MicroStrategy, MSTY, MSTU, Semler, MetaPlanet, all these other things, the bit bonds that people are talking about. Or you can go for a walk in the park holding your self-custodied Bitcoin, and maybe spend some time with your kids teaching them how to use Bitcoin, so that you can pass it on to them and have that generational wealth, and not be worried about zero-sum derivative games and also all sorts of things that ultimately turn out to be gambling, and things that are dependent on Bitcoin success, which you can enjoy if you just hold on to Bitcoin. So I like to simplify it that way, because there's so much complexity that gets discussed in these spaces, and for me, a lot of it is just it's not relevant if you're self-custodying Bitcoin. So stick with that, and you're fine. That's that's my advice.
But I think in order to get there where you are, Tomer, you have to understand like what the problem is and what. I mean, you don't have to get into all the
The problem is
nuance.
the money is the money, the thing
It's
that's
bad.
that you're told is money, is something that you have to put your time and energy into, and it's produced without time and energy. That's fiat money, and Bitcoin is money that does take time and energy to produce, and that's fully auditable and transparent, and you can participate in, and you can self custody, and nobody can freeze it. That really is, there's a lot of time and energy you need to put into understanding that distinction and the implications of those distinctions. But if you're getting caught down one end of a rabbit hole saying, well, this is an instrument that buys a bunch of call options on a company that's stacking Bitcoin because it's trading at a 2 times MNAV multiple, you're not actually focusing on that story. You're caught in fiat financial engineering discussions. And I'm not saying you don't do it. I'm just saying, look at the two worlds that I painted. One is you're free and you don't have to spend all your time investing. Your investment is the real thing. It's the money that is actual money that takes time and energy to produce and has a finite supply, which you can audit and you can send anywhere without anybody's permission. And all this other stuff is a microcosm of of that other broken system, which is whose base layer is a money that doesn't take time and energy to produce and can be frozen. And it's the opposite of everything that you say about Bitcoin. So
I think there's a
yeah,
caveat with what Tomer's speaking about, right? And that is, I mean, I would like to ask Tomer a question. What does someone, let's say someone focuses exclusively on self custody, right? And they become extremely fabulously wealthy. Um, what do they do for an income? What's your solution to that?
they spend as they need, which means they
Yeah,
sell as they need,
right.
right? But
That's my
they don't have
issue
to.
right there.
If you want to buy MSTY to generate income, you have to sell to buy that income. So
Sure, but
it's
you
6 of one,
have,
half dozen of the other.
but sure, but that's a bad characterization because one way you are selling your Bitcoin and buying houses with it or whatever you want to consume. And the other way, you are selling your Bitcoin and you are accumulating a yield generating asset. And I'm not talking about BlockFi and Celsius. I'm talking about the American derivatives markets that are designed to monetize volatility. And you are catering based on the performance so far at equal to Bitcoin. So, yes, I agree.
Yeah, I mean, my response to that is, I'm not going to accuse you of uttering a word salad there, but understand this: derivatives are a zero sum game, right? For every dollar made in derivatives by someone, a dollar is lost by someone in derivatives, right? They are a zero sum game. So if
Well,
you're
that's
buying an
capitalism.
No,
instrument,
but they're not as it.
no, capitalism is a positive sum game. Capitalism
Yeah.
creates wealth. The world didn't start with factories and Burger Kings and all this stuff. People work to build that. That's a positive sum game.
No,
Derivatives are
that
not. And that's a really important thing to understand, because if you're playing in a zero sum game, the longer you play, unless you have some kind of informational advantage, you're going to end up by and large at
Tomer,
zero.
that's not
And let's
true.
see.
That's just not true. So
Ah,
I'll give you an
Yeah.
example of how a derivative is not a zero sum game, right? MSTY comes in and they sell an option. Okay, they sell, let's say, a 400 call, right? I buy that 400 call. If MSTY goes up, remember they're buying the stock, right? So they have a covered call. I'm long the call they sold. If the stock goes up, we both win. So it's not a zero sum game. It's actually a participation in
But
the wealth creation,
but dark
right?
side to that point, it
But
depends on what your denominator is, right? So
hold on,
wait, let me just chime in
hold
on
on.
this.
Pause. No, no, no.
British,
Pause,
come on.
because it's going to be overcomplicating this whole conversation. Let's stick to the fundamental. You ever? I know what point you're going to make. You're going to make a good point, but let's stick to the fundamentals of this conversation. Not get stuck in the weeds around options. The philosophy of Bitcoiners, amazing Bitcoiners, saying the right thing for so long, which is accumulate Bitcoin, and then having some kind of mindgasm when it comes to now these tools have developed and saying it is completely wrong to take 10% or a 5% position and use these tools so that you can hodl harder. Yes, you're not going to have the Bitcoin, but you are catering that 10% at the same level as that Bitcoin. It is better, in my opinion, than selling the Bitcoin for stuff. And that's the misnomer that I can't understand with amazing Bitcoiners like Tomer. So Cosmo.
Let me run the numbers for you. Like, so you're saying take 10%. I'll make the numbers around. Take 10% and put them in an instrument that gets you 10%. So you're getting. So
No,
you've
it doesn't
sold
get you
10% of
ten
your
percent.
stack.
You're not understand MSTY. I mean, you've mentioned MSTY. You don't even know what the dividend yield is. The yield, it's paying out 60 to 90% a year.
And so you're selling 10% and you're getting 100% of that. So you're getting 10% back, right? And you've turned 10% of your portfolio. You have 90% of your Bitcoin,
In
and you have
cold
something else
storage, yes, in
in
cold
cold
storage.
storage, right? Yeah, that's cool. And the Bitcoin is growing at what rate? Like, you have to have an assumption. What's the rate of the growth of the Bitcoin
Let's stick
at the
to
same time?
let's just stick to Sailor's number, right? Let's 29%.
30.
Yep,
Let's say 30 to make the math easy on
yep,
us.
yep.
So so you your whole stack is growing by, let's say you started with 10 Bitcoin, just to make things easy, to make the math really easy. So in the first case of the person who's holding,
Yep.
in adjusted terms, they have 13 Bitcoin. They have 10 Bitcoin, but it's got the purchasing power of 13 Bitcoin after a year. The person who took 10% out and put it into MSTY, they had nine not their 10% Bitcoin became 20% Bitcoin that they took off, and everything, and then they had a 30% growth on the 9 Bitcoin, so they have 1 point or 12.7.
That's a
They're basically in the
misnomer.
same position.
No, that's a misnomer. The misnomer is this, that the underlying CAGR on MSTY is matching Bitcoin. So yes, you would put that one Bitcoin into MSTY.
I'm just saying the dividend. I'm just saying the dividend because you're clipping coupons on the dividend. You're
Yes, so you
you're
have the
you're
dividend
basically
and
six of
you
one,
have
half dozen of the
Tomer.
other.
You have
Except I've got a
no, you
capital
have the
gain if I'm even
no,
declaring.
no, you have the dividend and the capital gain. The capital gain is going to
No,
be less than
you
MSTR.
don't have the capital gain unless you sell it,
No,
right?
but we're
You're
talking
saying
about
you're
price
buying this instrument to have
appreciation.
income, so
We're,
you have the
we're talking about price appreciation here. Like
well,
you,
then if you sell it, you've lost your income.
no, you
So
don't.
so you're back to
That's what I'm trying to say. You don't lose your income.
yeah.
What are you talking about?
If you sell your MSTY, it doesn't give you don't get the income off of it anymore.
Yes, but like same thing as your Bitcoin, right? If you sell your Bitcoin, you
Well, that's
don't
what
get
I'm
the
saying.
gain
I'm
of.
saying it's six of one, half dozen of another,
It's
except
really
I've spent
not
six
because you're
million hours in spaces
Show me
listening
you're
to
not
people.
understanding. You're holding that 10% in MSTY. It is CAGRing, so it is appreciating at the same level as Bitcoin, and at the same time, it's paying you a dividend on a monthly basis. What is so hard to understand?
I'm just comparing what your net worth is on both situations, right? And you're more than welcome to do what you're doing, and I'm welcome to do what I'm doing. And
A
let's
hundred
meet again
percent,
in a year.
a
Let's
hundred
meet again
percent.
in a year. And I think that any of the risks that exist in Bitcoin are compounded in an increase in all of these derivative
Well, that's
instruments, because
true. That's
if
true.
Bitcoin goes to zero, right, and yet these other instruments have all kinds of other risks attached to them: regulatory risk, execution risk, key man risk,
Well, this
theoretical
is
risk,
true.
volatility.
This is true, right? You absolutely do have this increase in risk. But when you sell your Bitcoin, you absolutely have a decrease in Bitcoin. That's a
And when you
fact,
sell your Bitcoin for MSTY, you absolutely have a decrease in Bitcoin.
100%. But the 10% is growing in terms of capital growth, the same as Bitcoin. Because remember, MSTY is a derivative of MSTR. And MSTR will always CAGR higher than Bitcoin. So the MSTY returns on the actual share price appreciation is somewhere between, I'll be happy somewhere between the
I mean, there's an
QQQ.
assumption there. MSTR does not always appreciate at a faster rate than Bitcoin, right? Like
So you don't,
there has been.
so hold on. So you don't think that MSTR is a leverage return tool on top of Bitcoin? Because if we're not on that fundamental understanding, then
You know,
you,
British, I'm old enough. I'm
I
old
sold
enough to
some
remember when
MSTR when
you
the
believed the
MNAV was
opposite.
3.
hold
I'm
on,
old
Freddie
enough to remember
shitcoins.
when you
Give us a
believed the
second.
opposite.
Hold on.
Like, the MSTR generates yield, but it also trades at an MNAV multiple. The MNAV multiple was 3 back in November, right? And now it's 2. So they had to generate a 50% Bitcoin yield to keep up in that period of time. Like one can cherry pick points in time, but it's not necessarily always a guaranteed leveraged return. And if it is leveraged, then at the times when Bitcoin goes down, it would go down at an accelerated multiple of that as well. So like it's not, these things aren't risk free and they aren't
Well, they're
no
not meant
brainers.
to be, right? That's the point. No one's stupid enough to say
But
that
they
I'm
aren't
having the
guaranteed.
same risk profile investing in MSTY and MSTR as Bitcoin. Like
Right.
no one's saying that.
So but this is like the risk with MSTR, and I'm not saying it's a bad investment. I'm just saying the risk that you face is multiple compression, and we've witnessed it, right? When all the hype was all that excited, and the Bitcoin first broke through 90K and then 100K, that MNAV was 3, and if you bought at that time, the yield that's been generated has only been like 20% in, and the MNAV is like the Bitcoin per share yield is now 1.2 times what it was, but the MNAV is 2 instead of 3. So you haven't gained relative to holding Bitcoin. You've done better if you've held pure Bitcoin, even though Bitcoin has kind of gone sideways in that period of
Yes, this
time.
is again you're accusing of cherry picking data, and that's exactly what you've done. But regardless of that, I can understand the risk profile on MSTR. That's fine. The question I have is if we are grading hodlers, let's say we're grading hodlers over a 10-year window, right? Do you grade hodler number one, who basically has his cold storage Bitcoin and then sells it off on a monthly basis for income, higher or lower than the hodler who uses 10% in MSTY, maintains the compound appreciation on the MSTY, and generates a dividend and uses that dividend to buy more spot Bitcoin? Which hodler in that environment do you grade better?
Well, I think you need to start with a clean slate of two people with an identical portfolio and see how much someone's selling. Because if a person has $1 billion worth of Bitcoin and they're selling
Well, give them
0.09
an
to,
idea. I'm talking about, and let's say they got $1 million net worth right now, right?
so they sell 100,000 into MSTY
They
and
sell
they're
a
able
hundred
to live
thousand
off
into
of that.
MSTY. The person who's got only Bitcoin sells off 10,000 a month. The other
Yeah.
person uses that 100,000 that's in MSTY. It's also growing and appreciating at the same rate as Bitcoin, and they're using their 10,000 a month dividend to buy more spot Bitcoin. Who's a better hodler, Tomer?
Well, listen, if that holds up, the second one that you describe is going to end up better off.
Exactly.
But if there's an if, right? And the if
Yeah,
is
but
that
there's a certainty of losing Bitcoin on the
MSTY.
other side.
Sorry, there's a what?
There's a certainty that you'll have less Bitcoin on the other side. You're
Yeah,
saying the ifs
less
and the
Bitcoin
buts
that's
and the
worth more
whatever.
is you're hung up on exactly how many units of Bitcoin one has as opposed to how much purchasing power one has.
Well,
And
because one
right
Bitcoin
away
is
when
one
you sell
Bitcoin. That's
10,
what everyone's told me, Tomer.
yeah, yeah. Well, one Bitcoin, one Bitcoin, buys buys a lot more now than one Bitcoin did back when it was $600. So one doesn't have to play fiat games to get appreciation from their Bitcoin stack and to be able to live well. That's the point that I'm trying to make. And I I I understand that people who want to accumulate more Bitcoin are prepared to take certain risks to do that. But like in your example, because you arbitrarily pick 10% of their stack, that's the case. Like if you had 10 Bitcoin, you now have less Bitcoin. You have 9 Bitcoin because you sold one of them for MSTY. So right off the bat, where someone who's living off of Bitcoin might be clipping much smaller portions of their Bitcoin than 10% to get started. And Bitcoin might appreciate enough that they'll never spend it. One of the things that I've noticed is when you run like if you use, what's that model that Fred you like, the power law, it, depending on what you're starting with and how much you spend, you start spending a really de minimis quantity of Bitcoin once it starts to hit a certain higher level and you've got a good stack going. So you're not really spending a lot of Bitcoin. And I'm just saying it's like it is a legitimate alternative to and most OG Bitcoiners didn't have MSTY that they played with to get to where they are, who are comfortable now. And all the real OG Bitcoiners, like the people who introduced me to Bitcoin, they all regret all of the trades that they made of liquidating some Bitcoin to build a balanced portfolio of stocks and buy some real estate and this, that, the other. They're just like, it was so much more work. It created tax complexity. It created difficulties. I had issues with my stockbroker. I had issues with regulations and filing my taxes and everything else. And I wish I had just held on to the Bitcoin that I had. So there's
Yes,
But
there's
Tomer,
but
wisdom
that's
in
not
hold
that
on,
what that's not
Puncher.
what we're
experience.
talking
Puncher,
about.
1 second. The market has moved on, and this is the problem with quote unquote OG Bitcoiners. I know more OG Bitcoiners than I know existing old school TradFi wealthy people that have bought and sold more Bitcoin and lost more Bitcoin because they had to sell it in order to live. Now tools are available to do this. I can understand the apprehension. That makes sense. But to try and fight the maths is a bit silly. But Tomer, I appreciate the debate. Thank you so much, sir.
Okay, as a guy who has a PhD in the subject, British, you're wrong. You're
Well,
fighting the
firstly,
math.
your PhD isn't worth
Fighting the
much,
math
Freddie
is
shitcoins.
no. Look, listen. Look, okay.
Do we
Change.
really
You're
want
trying
to
to
get
change the
into this,
subject
Fred?
again. I
Fred,
want
you
to
really
focus
want to get into
squarely on
Fred?
Please,
MSTY.
You
please
want
get
to
into it.
talk, Fred? You're talking trash about MSTY all over your Twitter at the same time as launching, and so your idea is people should sell their Bitcoin number one or loan against it and live on it, right? Except you're
I'm with
doing
Tomer.
this.
Look. At the end of the
You're
day,
doing this at a time where you've launched a shitcoin token to try and take Bitcoin from people onto your token so you can lend to them. So, and you think everyone's stupid. They don't understand that you're talking your
okay,
book. And this is why
no,
you're talking against
no,
MSCY. The
okay,
reality,
no,
everyone can see it. We know you're Freddy shitcoins now. It's okay. We still accept you.
whatever. Like look, I'm just saying. Here's the thing. Tomer is completely right. If you fundamentally believe, like I think most people in this room do, that Bitcoin's going to a million in a reasonable amount of time, somewhere between 5 and 10 years. Okay, great. You got 10 Bitcoin that you don't need for living on. Great. Put those in a safe cold storage, earning nothing, zero. Okay, and then take whatever other Bitcoin you have and live off of it. And then in 5 to 10 years, your 10 Bitcoin will be worth $10 million. Great, and that should be enough for you to apply the Tomer strategy of sort of peeling off a little bit every year. Fantastic. That's end of story. You're overcomplicating it. And you're making all kinds of assumptions that MSTY is going to continue to have the 60% dividend and still grow the capital base, which I think is a really incorrect assumption. It really fundamentally is based on very, very little information. And, there's all kinds of risks involved. And, to me, it's very anti Bitcoin. What you're describing
Fred.
is not the
Fred, you
philosophy
and
of
I
Bitcoin at
were
all.
both Fred, you and I were both wrong on the MSTR trade, right? I corrected my thinking in 3 months. You have maintained your wrongness. You then promoted the power opinion, which 4 months later, after that, you realized that you'd followed the master PhD of an Italian moron and tried to set up a debate, which you got both of you got completely destroyed in by a guy that does not have a PhD. Then you've started promoting the idea of getting into Solana instead of Bitcoin. Then you've started the idea of promoting lending through a shitcoin and sucking in people's Bitcoins to launch BlockFi 2.0 in the sky.
Can we
This
stick
is
to
where
the?
we're at. So my
I know, but
prediction is
let's
this.
just
My
stick to the
prediction is
subject.
this,
Don't
Fred. In
divert. Don't
about
divert.
6 months, Fred, in about 6 months, you're
What?
going to move a couple million of your hundreds of millions of dollars into MSTY. You're going to go live in a French castle and you're going to
There's
drink Burgundy
absolutely no
all day.
way that I'm going to buy MSTY British. There's zero chance. But look, I think this. I think we were started with a lot of different things. I think we can move on to a different subject other than
I'd
MSTY.
love to move on.
Okay, thanks. Great.
Okay. Well, the issue is we're forced to live in two separate systems right now. One of which is Bitcoin. The other is a failing fiat that the world has not moved away from yet. So we are where we are.
So look, let me summarize here, because I think both parties are right. First of all, when we started this discussion, there was a stipulation that Bitcoin's CAGR would be 30%. Now, if Bitcoin's CAGR is 30%, even with margin compression, MSTY will do very well. right? Like that's just a fact. So in that respect, British is right. Now, if Bitcoin is to collapse, right, in a serious bear market, that means that its CAGR won't be 30%, right? And then in which case Tomer and Fred are right. So I think, you know, I think it's really important you understand that, anything you do short of holding Bitcoin in self-custody is taking more risk than holding Bitcoin in self-custody. But for those that are looking to, I go back to, I hate, I mean, I don't want to belabor this point, but I go back to British's original example, which started the entire Misty debate, which is he has a friend who has, what was it, $4 million in Bitcoin and was struggling to take care of his family. I think in that case, selling 10% and being able to generate income to take care of your family using Misty is not the worst idea. Is it risky? Sure, it's risky, right? Of course it's risky, but it's only 10% of his portfolio. And at some point, you got to take some risk, right? Is it more
But
risky?
but but
Is
to your point though, Dark.
Yeah.
To your point, let's just say, and to Tomer's point, right? It's a very simple math. Let's just say your CAGR is growing at 30%, and let's say you sell 10% of your stack every year, okay, to pay for living expenses. What is the CAGR of the remaining stack growing at? Very simple math. 20%, right?
Hmm.
Okay. So you've cut 10% off of your CAGR. But actually right now the CAGR is 40%, not 30%. So you can live off of your Bitcoin by selling your Bitcoin and enjoy a CAGR of 30%.
Well, it
You know,
depends.
Brett, but this is the problem with VCs, right? You guys do not seem to understand that we've got a once in a species opportunity to own as much of a scarce asset for the first time in 230 years as possible. One Bitcoin equals one Bitcoin, and the Bitcoiner's objective should be to get people to hodl as much of that scarce asset as possible. I don't understand why
No,
there's a misnomer here.
no, look, again, you're both right. I mean, we can argue
We are
this.
both not right, Doug.
Well, look,
We've got to get over this Bitcoin hand jobs that we give out to everyone just because they talk about Bitcoin. When they are wrong, they should be told they are wrong. I was wrong on MSTR and I corrected my thinking in public. I told everyone I've sold the majority of my position. I was right for 3 weeks and then I was aggressively wrong for 3 months and had to reevaluate in front of everyone.
I understand. Look,
When you
I
are
I get
wrong,
it.
you should be told you are wrong. And these guys are not ever told they're wrong. So they have fits about it.
Yeah,
And the OG Bitcoiners are the most wrong because firstly, they didn't understand it was going to be a big enough asset. I've met OG Bitcoiners that are broke today because they didn't understand what it was going to be. Right? They were wrong. I've met OG Bitcoiners that have rebalanced their portfolios into other things because they didn't know how big it was going to be. So they were wrong. It's okay. This is how you learn.
look,
We've got to stop with this feel good hand jobs that we give
I'm
out to everyone just because they're
I'm
Bitcoiners.
not trying to give feel good hand jobs to anybody. Look, to me, you have three choices, right? In the scenario that's being laid out, you can go with Fred's route and sell 10% of your Bitcoin, which I hate. To me, that's the worst option. Number two would be you could borrow against your Bitcoin, right? I think that's the less risky approach, and you still maintain your Bitcoin and maintain your CAGR. And number three, you can sell some of your Bitcoin and buy Misty, right? And produce income that way. But again,
Yes, the worst option is selling your Bitcoin. I agree.
yeah,
Right?
look,
The best option is long-term fixed rate borrowing on your Bitcoin at the right time. Because again, that could also go wrong if you do it wrong, right?
why is selling your Bitcoin the worst option? I mean, honestly, I'm serious.
The
I haven't
fact that
sold
you
my
are even
Bitcoin, but
asking this
why?
question, sitting in a Bitcoin space, tells us everything. Everyone in this room now has a clear view on exactly where your mind is at.
No. Now, my mind is one Bitcoin is not always one Bitcoin. What matters is the purchasing power of your Bitcoin. If Bitcoin's at 1 million, you know what?
I don't,
It's a
hey, I don't
different
know what to
animal
say
than Bitcoin
anymore.
at
Like,
ten
I think the
thousand.
point is now proven.
well, I'll say this.
Well,
I'll tell you this, Fred. Every time I've sold a Bitcoin in my life, I've regretted it. Period.
sure.
I want everyone to clip this clip this that of Freddie Shitcoin saying and admitting that he is a fiat brain, doesn't understand Bitcoin, and put it out there. Share it with the world.
Well, look,
Freddie
hey, when you
Bitcoins has
bought
just exposed
MSTY,
himself.
British, when you bought MSTY, did you sell Bitcoin to do that?
Yes, I moved some of my IBIT position
No, you
into
didn't
MSTY.
move some of your IBIT. You sold Bitcoin to do it. That's what you
Yes,
did.
absolutely. I sold, but here's the point I was trying to make to Tomer. With MSTY versus selling your Bitcoin for cash to buy shit with it, with MSTY, what I'm doing is I'm still maintaining the fiat Kager,
This is a
right?
self hand job. This is a masturbation ploy. That's what you're doing. You're giving yourself your own hand job. That's what you're doing.
Listen, Fred, it will be better than allowing you to do it. Firstly, let's just deal with that, right? Secondly, it is much better for someone to not let go of their Bitcoin and convert it to Lamborghinis or cases of Burgundy, whatever you want to purchase, right? It's better in my opinion. Again, it's just an opinion. We're having a philosophical debate here. It's better in my opinion for an individual to convert that, let's say $1 million portfolio, 100,000 of that, put it into MSTY, still maintain a compound annual growth rate that's similar to Bitcoin on that 100,000, albeit in fiat, and generate a dividend yield so they never need to sell their Bitcoin. What is wrong with you guys? Why can't you clearly see that that person would be graded a better hodler than someone who sells their Bitcoin?
I think we're all saying the same thing, but we have different strategies because I believe everyone on stage
No,
agrees.
Fred is saying sell your Bitcoin or give it to him on his Solana based lending platform that will trap your Bitcoin and eventually rug pull it. Like
Well,
that, it's
what?
one of those options.
But here's what I think Fred is saying, British. What I think you're saying, what I think Tomer's saying, is that we're all saying never sell your Bitcoin. Hang on to your Bitcoin, but
Yes.
right. So don't sell it for fiat
But Fred is
dollars.
not saying that. Fred
But
is
as you
saying
need to
there's
spend
nothing wrong
it,
with selling your Bitcoin.
spend it for things you need or want. For you, British, you spend it on these derivatives because you're good at this. You're talented in that. You
I
know
don't
how
need
to.
to be good at it. No, that's mischaracterization because I chose not to trade it because MSTY does the job just as good as I would do it.
But what I mean is, if we're talking about semantics, you haven't sold your Bitcoin, but you've spent it to have Master and Misty and whatnot, right? Like Tomer and
By the
I,
way, from an
we spend
IRS
it for
point of view, he
bills.
did sell his Bitcoin. From an IRS, from a tax standpoint, he sold his Bitcoin. There's
Well,
no doubt
I'm
about it.
not a cuck, Fred. I don't pay taxes, right? Because I've chosen that I do not want to be in that reality. So I don't have to consider that because I'm smart enough and willing enough to move to a place where I don't need to pay taxes. And I'm advantaged enough to not do that. Most people are not, right? So I don't like having the tax discussion because it's a very individual thing. Like it's hard to have that debate about taxes because
Well, you
most
know
people
what?
don't
You
even
may
want to
not.
move out of
Not everybody
California.
lives in Dubai, British, and
You could,
you,
even if you're American, you can move to Puerto Rico, right? But most people choose not to because they like whatever's going on in Texas, Florida, California,
you know
wherever they
what?
are.
You're right. I don't like Puerto Rico, and I
Yeah,
actually don't
I
like
get it.
Dubai either, and it wouldn't help me to go to Dubai. But
Yeah.
you know what I'm just saying is a lot of us, a lot of us want to live in, you know, California or wherever you want
By
to
the
live,
way,
or
Fred, I
you
don't
know.
know if you
So
saw a tweet of mine. I actually said if California reversed its blue hair policies and made a tax solution for me as a non-American, California is the best place in the world to live. 100%, completely agreed. It is the best place in the world to live from a climate perspective,
right. So
from a
that's kind of
variety
my
perspective.
thing as I
But you guys
enjoy
have
the
to pay up
lifestyle.
20 to 50% to live there
So
and deal with the trannies.
I don't, you
Hey,
know, I don't,
hey, so we stay.
I don't
So
quote unquote deal with the trannies.
yeah,
Okay,
so we
you
stay on
deal.
topic for a second. Let's
Okay.
go to Eric's hand and then unsupervised hand and then we can get back to the trannies.
Hey, just real quick, Terrence, please stop polluting my timeline with sats per hand job questions. I don't want them. Thank you.
Yeah, guys, we this has become a tranny hand job space, and I enjoy the bickering because it's interesting. However, I kind of agree with Darkside. I think the thing that we fundamentally lose when we're talking about Bitcoin and allocations and portfolios is we're projecting our own personal situations upon the rest of the world. So not everyone in here has $1 million in Bitcoin. Many do. We all have different stances, and I think the one thing for generating income that's been tried and true for, I don't know, 10,000 years is working. So there's the other option of getting a job and working to stack Bitcoin. Because I think what we're watching right now is the financialization of Bitcoin, which makes alternatives very attractive. And I just put some money in Misty last week because I had extra money from a trade on the VIX. Not everyone has that. But I think if we're looking at this from the right perspective, I think that that British is right. There's definitely alternatives. If it fits your situation, you can generate income with Bitcoin. Also, on the other side, Tomer's totally correct. If you're diehard on cold storage, work some extra hours, find a new job, cold storage. Everyone has their own perspective, but we are watching the financialization pulling people away from the core tenets of Bitcoin, which is cold storage. And that's not a bad thing. That's a good thing. That's new opportunities. That's new areas for people to leverage, to buy iBit, to buy Misty, to buy these other things. But at the end of the day, it's kind of like going to Steak and Shake over the weekend. People are like, "You brought your stack to Steak and Shake?" No, I have a wallet on my phone with $500 I use to spend Bitcoin anytime. What I'm keeping and storing, I'm going to keep in store, and everything else, I'm just going to work my butt off and keep stacking with it. So we kind of get into these arguments over things about our situations when there's 1,200 people here listening to this that are not in our types of situations. And I think fundamentally, the more Bitcoin you have in cold storage, the better. If you have enough of it to play around with and you're comfortable doing it, you want to generate 60 to 90% in cash flow, I think you would actually kind of, that's a extremely attractive opportunity. But each person is on their own. There's too much judgment of people. And, you sold Bitcoin for this. Like, listen, I sold 4 Bitcoin, I don't know, 7 months ago to build an energy project, which ended up being a mine. So there's other things you can do with it. Everyone has their own prerogative. I am enjoying the overlapping tranny hand job conversation along with us, though. So I don't want to interrupt the discourse because it's actually pretty entertaining.
Hey, Dark, I think your mic is open. Let's go to unsupervised, then back to Tomer, if you're okay with that, Puncher.
Hey, everybody.
Yeah, good.
For me, and Eric kind of mentioned it, but for me, like about half of the country is sinking in credit card debt, right? And nearing close to 30% interest. So what's attractive to me with Misty, my goal is to get to what Tomer's talking about. I want that life. I want to have everything in Bitcoin and build that. But to get there, I've got to clean house. And Misty is offering me an opportunity and people like me an opportunity to eliminate some debt much faster. Like our income isn't where it used to be and it can't outpace it. So, if your credit's good enough, you can get, 0 interest for, 12 months, with a small fee, put that into Misty and potentially eliminate your entire credit card debt and clean house, then move towards just, accumulating more Bitcoin. I just wanted to point that out.
Tomer.
Thanks. I mean, I guess the first thing, which is more of a point of order than anything else, is British. Like I appreciate you, man, but having to resort to name calling and it 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 weakens your position. It
This is
weakens
what it
your
feels like
argument.
to be told off by a Bitcoin OG I love. I love it.
You call people names and you think that that's
I do.
valid
It
rhetoric.
works really
So
well.
okay. So there you have it.
Oh, it's
That
absolutely a
that's
strategy. It's absolutely a strategy
okay.
for sure.
Well, it's not a valid rhetorical technique, is what I would
Oh,
is
I'm
what I
not
would
trying to be
point out.
valid and rhetorical. I'm trying to get people to
Okay.
1 Bitcoin.
Right. Well, you keep telling them to sell 10% of their Bitcoin and to buy something else with it. And
Yeah, once
I
they
think
get
that's
over 1 Bitcoin, Tomer, maybe you haven't heard my rhetoric on this, but it's very clear. You do not get into income funds unless you have more than $1 million net worth.
okay. Okay. Listen, I my point is not to try to argue. Like I think to the speaker who just spoke, MSTY is relatively new. I don't pretend to be an expert in it. I understand that it's not Celsius and it's not BlockFi, but it's something else that's trading on derivatives of MSTR, which is trading on Bitcoin. And I really hope that everything works out for you. the slow and steady pace with Bitcoin has been an effective strategy in the past. I appreciate the British is saying things are different now. You can accelerate it. But if it were actually a guaranteed accelerant, the advice would be put 100% into it, and quite wisely, British is saying get to at least one Bitcoin and never sell any part of that one Bitcoin, if I'm correct, right? And I think that that's pretty good advice, and that clearly also embeds a thinking Bitcoin's going to go up to be worth a lot. That's why you only need one of them. So if you can get 1.1 Bitcoin instead of having one Bitcoin and some other MSTY, you're going to be 10% better off in Bitcoin terms, notwithstanding what ends up happening to MSTY. So it is everybody's individual decision. I can't offer financial advice. I can just say I know that that over the last 16 years in particular, but even over the last 10 years and even over the last 5 years, it's been pretty darn good and easy to stack and hold Bitcoin. And I really actually very greatly appreciate how hard it is to get an income now and how hard it is to buy the things you used to expect to buy or one should expect to buy with that income. So it's all really difficult. And there's no easy routes around it. So there is no magic bullet that's instant and quick. Sometimes people get lucky with some of these things. Sometimes they get unlucky, and just don't expose yourself to something that will be devastating if you get unlucky. With Bitcoin, that's long-term savings, it's going to come back in time, right? And certainly any of these other things, if Bitcoin gets damaged and doesn't come back in time, those things are getting even more damaged. That's all I have to say.
Grace Kelly.
Yeah, my my technique has been to have a job, right? And someone said that, I think it was Eric, get a job. But the problem is, it's very difficult to generate enough income to overcome the devaluation of the dollar and maintain the lifestyle you want to live. Investing in things that have 40% EBITDA margins but taking on a tremendous amount of risk. And I'd like to think I know what I'm doing when I get involved in businesses, but holy shit, man. Like just opening up a storefront. You got to give a personal guarantee if you take a loan. You got to give a personal guarantee on the lease. You have all kinds of counterparty risk all day long. So even that technique of like owning a business that generates income that you can spend instead of spending your Bitcoin is becoming unsustainable. And even if you're good at it, I'm not in the point where I got to have fixed income like MSTY to generate that income. But for the average person, it's just getting amazingly hard. And I look at my Bitcoin go up and I go, why am I doing all this shit, man? Why am I taking these risks? It's just, I can't imagine what the average person's going through who's making 80 grand a year, trying to put kids through school and everything else. It's too hard.
And also, I'll tell you another thing you can do, Puncher, is invest in other people's companies, right? Angel investing. I've done tons of that. And I look back and I'm like, okay, why do I need to angel invest when my Bitcoin's just going up through the roof? Why do I need it? And I think, people like Christopher have made this point. Rob, who's a VC, has made this point. I think at the end of the day, it's all about total return. And people like British are making this distinction between the income part of your portfolio, and the non-income part of your portfolio. And this is a very fiat way of looking at it. This is a TradFi way of looking at it. But at the end of the day, the 40% CAGR historically has been even higher than that of Bitcoin. It is really changing the game. And at the end of the day, the only thing that matters is your total return. And really, that really there's only one determinant there, which is how long are you going to be in Bitcoin? That's it. How much Bitcoin do you have and how long are you in Bitcoin? That's going to determine your thing. And you can put some in MSTR, you can put some in MSTY, you can put some in IBIT. At the end of the day, none of that really matters as much as how long you have it in Bitcoin.
Well, that's the new hurdle, right? And I'm sure, Puncher, you go through this a lot because I know you invest a lot, like with ego death and whatnot. And I would assume that unless you're at 40 to 50%, it just doesn't make sense. I mean, unless you guys are doing some of that for philosophical reasons.
No, I'm doing it for money. quite frankly. The philosophical is, at the time was an add-on. But again, now when anybody comes to me and says, I got this thing, it's going to cure cancer, it's going to revolutionize the cement business, I just go, guys, if you can't be 45% with me doing zero and taking really no risk, I'm not your guy. I can't do it anymore. And that has all kinds of repercussions. Not that I'm a big shot, but when people like Fred and others aren't investing in these businesses, kind of to a halt. Sorry, I got a phone call there.
Bitcoin is the new 0%, right? But, it's enough. I really do think that, I'm not going to bash anymore on MSTY, but look, at the end of the day, this asset class is growing at a sufficiently high rate that if you have any kind of assets at all, it should be enough to lift you into a pretty decent lifestyle. I think, you don't have to be super clever about it. You just have to, as Tomer says, it's not necessarily rocket science. You just have to buy it. You have to not sell it. You have to not get spooked out, at the inevitable drawdowns that there will be another one. But this Bitcoin's going to 1 million. I think you really have to start with that idea. It's going to 1 million. How much are you going to hold on? You may not be able to hold on to your entire stack. That's okay. You know what I mean? You know, uh,
But
Nobody's
Fred, the
counting.
genesis,
And the
the
only thing that
genesis,
matters is your purchasing power.
yeah, the genesis of the whole conversation, I guess, is to British's point. You hold Bitcoin. All the big shots want to take it from you in one way or another over time, whether it's you or your kids or your grandkids or your great grandkids you'll never meet. How do you, it's also you have a hole in the boat. As long as there's a fiat system, and maybe even after a fiat system's gone, you have a hole in the boat. How do you make that leak as little as possible or eliminate the leak altogether? And I think MSTY looks like a pretty good way to at least eliminate that leak for a while. It's not without risk, but the leak is pretty small, if at all.
Old Taylor, I think you can speak now.
I don't see him on stage, Terrence. If
He's
you
not on stage. Another thing that will happen,
Okay, I got
Hunter
Peg.
and Darkside, is I do think that there will be some kind of bit bond type yield instruments. They certainly are not going to yield 50% like MSTY is claiming to yield. And I would say any yield instrument that is yielding any more than 12% is highly suspicious in my view. It's just too good to be true. So I don't think you can count on 50% anything in terms of a yield instrument. It's never the case. But I do think with these bit bonds, you're going to be able to count on something like 10, 12%. And that should be a good enough for, the yield part of your portfolio.
Peg, you're back on stage.
Oh, hey guys. Yeah, I just want to chime in that it's just a kind of weird conversation when I feel like people are acting like we just met British, that he just walked in the room. Everything that he's ever said is underpinned with, first of all, securing your stack as to the best of your ability, whatever you can do. And then in terms of derivatives or Bitcoin derived, let's say, stock holdings, many of us have funds that we cannot put into straight Bitcoin. So many of us have worked for decades. We have IRAs, we have 401ks, and it's been very helpful to me to get if I choose to take advice, to listen to and hear advice about how I can support the building of the Bitcoin network, because I think we have to realize there are going to be so many opportunities to support what we view as the inevitable ubiquitousness of Bitcoin and its network and its financial products. And it's going to take a lot of work other than just hodling. And so I'm very interested in putting my assets to work in the endeavor of building the Bitcoin network. We don't just want to be parallel to fiat. We don't want to run parallel to the fiat network. We want to be ubiquitous and dominant and preferred. And that's going to take a massive effort. And I just think we're all on the same team. But I mean, to act like, to be indignant because British is, um, part of his shtick is arrogance, elitism. He comes on with the cigar. Come on, guys, this is British. We love him for it. I mean, I'm Irish, and I know that 200 years ago, or 150 years ago, probably even 100 years ago, for him even to use the word British in his title with his complexion would be an absolute affront. So I say more power to British, and I have always found everything that he says valuable.
Hey,
So that's my two.
hey,
That's my
Thank you
thank
two
you.
so
cents.
much.
Yeah, thank you so much for saying that. Well, I just want to add one more thing because I think, with these yield generating products, a lot of people get focused on Misty. And, they have another product called Ybit, I believe it is, which is essentially the same concept, but taking the yield out of Bitcoin itself and removes all of the MicroStrategy risk. And for those that are concerned about multiple compression in MicroStrategy, or um, or just MicroStrategy as a whole, the Ybit product, while it doesn't yield 90%, I think it's somewhere in the 60 to 70%, is still extremely interesting. And I think it counters a little bit of what Fred was saying, where anything that earns more than 20%, I'd be extremely weary of. Look, Ybit is essentially IBIT, essentially exposure to Bitcoin and selling volatility, right? So you're to British. If you want to keep with what British is saying and maintain your exposure to Bitcoin, and have the ability to earn tremendous yield, I think that may be a good way to split the baby, because it's a direct monetization of Bitcoin vol with exposure to Bitcoin as the underlying, instead of interpositioning MicroStrategy, which obviously is extremely controversial. And look, I can make a very good argument for multiple compression. I can also make a really good argument for multiple expansion when it comes to MicroStrategy. So for those that want to take more risk, right? MSTR, MSTY, that complex, I get it. But if you're a little more risk adverse, yet you're looking to have exposure to Bitcoin, albeit fiat exposure to Bitcoin, and be able to generate income, Ybit may be the answer for you.
Ybit is down 47% over the last year. If that kind of return, you love that kind of return, buy Ybit.
What?
Taylor.
All
Ybit is
right.
down 47%. Thank you.
Okay, I've got a spiel here. So I've been in Bitcoin since early 2013. I'm living the Bitcoin life that Tomer is talking about, where you're just peeling barely any off, and I've been doing that for 16 months now. I didn't even have to file a tax uh, return this last year because of the small amount of Bitcoin that I peeled off. Because I sold my house, eliminated all my bills, put all that equity into Bitcoin, and moved my family to freaking India, where we barely spend freaking anything. And I still wince every month when I'm selling a little bit of Bitcoin to pay my bills, which are negligible. And so, it's been 16 months. I've been homeless and unemployed, and we've just been beach bumming it. And I just wanted to make Gary happy to know that I am like kind of working on getting a job and have a couple things I'm working on. But that I wanted to echo what Eric and Puncher were saying, which is, that's the thing that wasn't being talked about, is just go get a freaking job, to supplement the bleed. And it's that, that's the thing that none of you guys are talking about. Everything's so financialized in our world, and I have a degree in finance, but everything's so financialized that we're just talking about financial solutions to everything. But you really could just work. And I worked until January of 2024, and I've been buying Bitcoin since 2013, and I've just saved all the Bitcoin I've ever had until I quit my job in January of 2024. But that that's just the solution. If you don't want to be bleeding out Bitcoin, then just live off of your income and save Bitcoin. That's all you got to do. So I don't that's the most simple way of doing it, and everything you guys are talking about is overcomplicating it.
I actually think that's very true, and I completely agree with you saying that. I very much agreed when Eric said that. You should not stop generating income and creating value in the world.
Matt.
Yeah, no, I just wanted to reiterate that, Taylor. I think probably have a maybe more relatable scenario myself than a lot of the people here on stage. Just continuing to work, try to always level up whatever skill sets I can work on. For me, it's primarily been communication skills and sales related to the engineering job that I do. And then just stacking sats with whatever income I have left over at the end of every month. And I've been doing that since 2018, really. And I have a good friend who's worked in the banking system for various banks. He used to work at the Fed. He's worked at a bunch of small banks since leaving them, and has been putting all of his money into trying to do startups and trying to get VC funding, and just kind of, I mean, really just burning the candle at both ends, honestly. And I've seen him do that over the past same time frame from 2018 to now. And just the, I think, years of his life that he's probably given up, unfortunately, for, just giving himself health complications, basically trying to chase the potential higher return that the financial world can offer, when the reality is most people don't actually get that when they're chasing it, right? Like the success rate of a lot of the these, like VC pursuits for for startups is just abysmally small. It's like less than 1% are actually successful. And I don't know, I just think that for whatever reason, maybe it's just the fiat world has really demeaned just working relatively normal jobs, and putting more productive effort out into the world than you're redeeming from it. Like, there's nothing wrong with doing that. And I know just a lot of the time our conversations get so caught up in financial stuff, because a lot of these things are interesting and it's fun to talk about. But um, I've gone from basically nothing net worth to one that I'm proud of in that time frame by just working and not trying to do anything cute or fancy or playing with any instruments or shit coining or any of that stuff. Like, just work, pay your rent, make more than you live off of. It's not that complicated. And over time, like I said, I've gotten to a place where I'm comfortable now. And the fact that I have no stress compared to that person who is just still trying to chase that fiat game, I don't even know how I can put a monetary value on that. Like, my net worth is not over $1 million, but I certainly feel a lot more comfortable than I think I would if I had a net worth of $1 million and I was just like trying to chase financial instruments and day trade and do all this crazy stuff. Like, I feel like, I forget who it was. It was Eric or Taylor that said, like, we're kind of overcomplicating things. And I really just agree with that. So, anyways, I'll shut up.
Well, Matt, there's a difference. I think there's a distinction here between working a job, getting paid, and then being an entrepreneur. I see very little reason to be an entrepreneur anymore. And now Gary said it in one way or another. Fred just said it. It's just too hard, man. It's too much risk, especially for a Bitcoiner who doesn't, that they don't need to work. But the idea, I don't get involved in any business anymore that I can't be personally, like, have a hand in a meaningful way. And even that now, it's just too
Well,
risky.
could I
It's
just say
especially,
something to that, Puncher?
yeah.
So the friend of mine who's trying to do the entrepreneur route and startups and all that stuff, there's always, like you said, like trying to do this whiz bang, I have the next unicorn thing. And I feel like what most people have lost track of is a lot of the wealth that was built in the US before was people just doing things that were of value for other people, like making something and then building wealth over time. Like there are people that my parents were friends with who have plumbing businesses or flooring businesses or things like that that have seven-figure net worths and higher, and they never did anything other than install tile in people's bathrooms and have a few trucks around locally. And like for some reason that just gets demeaned, and it just makes no sense to me because those are the people who you actually need. Like when I did own a house, I had a plumbing issue one time and my basement was flooding, and the guy that came there to help me figure it out came at like 11 p.m. and I was perfectly happy to pay that bill to not have my basement flood, right? But everybody would be like, "Oh God, you want to be a plumber?" It's like, I'm not telling everybody out here to go be a plumber either, but it's just like that person is providing a valuable service to the world, and that's more commendable in my view than, no offense, dark side, people just sitting there trading derivatives. Like everybody can't sit there and trade derivatives, but if everybody's doing plumbing work, the world would be full of a lot less shit, right? So that's just kind of what I'm
Yeah,
getting
Matt, I'm
at.
not, I'm not, yeah, totally. I'm not talking about that guy. That guy's a sole proprietor. He's not, that's not the entrepreneur I'm talking about. I'm talking about people who finance things and are the capital which is needed to start new companies. Those types of endeavors are becoming extremely not worth it, in
Well,
my
don't you think
opinion.
that's a little like it's just kind of oversaturated because people are chasing stuff so much? Like I don't know. I feel like I remember it was like 2022, 2023. My buddy who was trying to get funding was telling me some of the things that like Silicon Valley Bank was doing, for example, where they're just like kind of throwing money at startups, and then all of a sudden, very quickly, it reversed course, and there was no VC funding going around. And this is not a world that I live in, so I'm completely talking out of ignorance here, just as somebody who's kind of on the periphery of it. But it seemed to me like there was a time period where stuff was getting funded like crazy, and then, like you're saying now like nothing is getting funded, or it's a lot harder to because the returns just aren't there. But I feel like a lot of that is because the things that were getting attention and getting funding, when I look at them as someone who lives or likes to consider themselves as living in the real world, I'd hear some of these ideas and they're like, yeah, it's $1 billion idea. And I'd like, I don't think so. It doesn't sound like it to me, but I don't know. I'm no fancy VC person either. So it just doesn't make sense to me
Well, I'm
that
sure.
they'll throw money at companies that don't actually turn any profit. It's just never made sense to me. I understand that there's fiat games that get played, but it just feels ridiculous that you can just continually inflate the valuation of a company and it never actually generates like a positive income for itself. Like it just makes no sense. And that's just how do I get to that next raise? Meanwhile, you can have a company like Uber or something that basically exists for however many years without ever actually making a profit. It just, I don't know, it feels ass backwards to me. That's all.
Well, good, Eric. All I'm saying is every single investment that I've made over the last 6 years, what I should have done, even the winners, and there's been some winners, I should have just bought Bitcoin. That there's no other way to put it, Eric.
Yeah, guys, there's a definitive point in history that we're coming up to, right? We have AI coming in. I still remember when I was coming up as a young guy that somebody told me, he said, in your 20s, learn how to do the things that other people hate. You'll be great. And while you're doing that, meet good contacts along the way. Great advice. This inflection point that we're at right now with the onslaught of AI, which is going to, the next 24 months is going to revolutionize the workspace. You have that correlated with information from Intuit in I want to say 2018, 2019. They said by 2030, 45% of Americans will be independent contractors. You have this era in time where there are still these things called jobs, right? Like that I think we're going to see a big transition into independent contracting. Take advantage of that. Someone else is going to pay you for your time to do work. Idle hands are the work of the devil. Like the less things you're doing to produce productivity in the world, the less happy you're going to be and the less profitable you're going to be. But you also have to look at there's two types of people. There's the people who believe that markets are truly honest and reactionary, and then there's other types of people who believe that markets and economies are orchestrated well in advance. And if you look at the latter version of that. It's pretty obvious. Bitcoin started in 2009. Since 2009, we've been putting band-aids on bullet holes in our economy, and that blood is pumping through the band-aids right now. Some people believe that we'll fix it, everything's gonna be fine. Others will believe that it crashes. At the end of the day, what's happened is we've gone through a massive inflationary period. We've got trade deficits, trade wars, tariffs, which I think are a good thing, by the way. In the end, they're going to be painful for a while. But we're going through this period right now where it couldn't be a more perfect storm where, Bitcoin's 100,000, people are struggling to get by, everyone's trying to accumulate Bitcoin. And now you have this financialization where it's pretty obvious that corporations are trying to tempt you out of holding cold storage Bitcoin. And then we have people in the space who've made, millions and hundreds of millions of dollars doing it, and people with $10,000 trying to emulate their lifestyle. Everyone has a different perspective and a different point. But at the end of the day, we have an opportunity in our economy right now to get paid to do work for someone while we learn skills or improve our skills to create an independent contractor world. What Matt just said is exactly correct. The best businesses in the world are the ones that produce income. And I think Saylor's kind of illustrating this change in the market by focusing on assets in his company and not revenue, because I think we are going to a price to book environment in the next 5 years. So businesses will be judged on their revenue and their assets because the other model was successful for a period and it's now failing. But take advantage of this time in history. Go out and grab income any way you can, stack some Bitcoin. Your life is going to get a lot better, but sharpen those skills because skills will be at a premium. Real world skills will be at a premium when AI starts taking all of these meaningless time tasks, which people are being paid for currently.
Cosmo.
Yeah, to Puncher and Matt's point earlier, I remember Saylor in one of his presentations was talking, and he's saying that entrepreneurs can take a big, deep breath. They don't need to freak out as much. And I mean, as someone who's built a business recently, I think it's been since I've kind of discovered Bitcoin, but like I don't know if I've outperformed Bitcoin at this point into the future. I don't know if I can. Like to some extent I have, and it's a business I wouldn't trade for the world because it's very personal to me and I enjoy it and it's fun for me. But I think that there's a lot to say about you know talking about this as like the hurdle rate and where money goes. But yeah, to Matt's point, like I think one of the best things you could do is find a way to generate the most amount of income you can right off the bat, because your most valuable asset in this era of Bitcoin gaining
I have a
adoption is
second phone
time,
now.
right?
So yeah.
Yeah, go ahead.
Dark.
Dark, you got a hot mic.
Oh, hot mic. Yeah, well, I was just saying, like, time is of the essence, and British always talks about it too. We had him up on the stage, but the time value of your money currently is so big when you can just throw it into Bitcoin, and you don't have to deal with the stresses that come with starting a business and going through the rigmarole of dealing with all of the blockades that are in your way because of government and people around you. Anyway, I just think that that was a really good point Matt made.
Well, quite simply, Bitcoin just finally allows us to save. We just have
Yeah.
never
Yeah,
ever
but
had a savings
but
vehicle.
we're
That's all.
we're we're
And so you don't
also
have to invest.
yeah, we're also catching up to 100 years of inflation, right? So like it's not only that we have our savings technology back, but we have this opportunity to be at the start of catching up to all the inflation that's just beating the hell out of the country for 100 years.
Yeah, totally. Hey, before we go
Well,
to BTC Housewife, Gary, did you have your hand up?
Yeah, I just wanted to add on to Eric, and wanted to thank Eric for being here because his very consistent messaging. Uh, Look, I think people. This is a really, really cool conversation. First off, I think it's. I don't know how many people in the room, but it's very helpful. I get really concerned about all this talk I hear on Misty. Uh, because I think people are doing exactly what Eric is being gentle about, which is why would you want income from Misty, man? Like that's telling me you can't. You're saying you can't generate enough of your own income. I do not want any income if I can possibly help it. I think these are very special situations, and there's a lot of confusion out there. Misty should go to zero at some point. Okay, you can't pay 120% dividends forever, guys. This is like Celsius. I don't think MSTR is going to blow up. Where it's like it is, hey, look, you can't. Imagine if there was, why isn't there $8 trillion of demand for that product, right? At 120% yield, you would think there would be, because there's not a big enough market for it. It would break. Whereas Bitcoin, and here's the difference, right? Bitcoin could go up 120% a year for the next 20 years or five, and that will not break, right? It won't break because we're at the infant stage of demand. So one, I would just like to say on the income, this is the last product I've looked at it, and maybe I'm looking at it wrong, but I do not want more income tax. Okay, now what I think would be better is like I want to invest in growth, and relative to what Eric was saying about this special point in time, look, the connections, we to me the key words in the future in the next 3 years are going to be connections and adaptability and the willingness to get out of your lane now. I have been one of these proponents: stay in your lane, stay in your lane, stay in your lane. You got to decide right now, is your lane even going to survive in the future? And if it's not, I've been asking people to ask themselves this question for years and years. If you don't mind, I'll just take a minute or so. Which is, look at the company you work for, and if within 2 sentences, without any thought whatsoever, define to me what the value is they bring to society. If you cannot answer that question, like, you probably need to start looking for another role, another platform. Think of these as platforms. A job is a platform for you to enhance your skills. The problem with you not working, dude, you're not going to learn anything. Like, you stop learning. That's the problem. You stop meeting people like me and Eric and Puncher and people that push you around a little bit, and you're like, oh wow, I don't know how to operate with these cats. So the connection thing is really, really important. And no one has an advantage today, including me, my brothers. Maybe Trump has the advantage, but very few people can't get connected today. Like, what I've done in 2 years is like pretty, like what I've done in 4 years in crypto is amazing. Okay. So don't tell me you can't do it. And don't tell me, oh, you have money. It wasn't about money, man. It was about me showing up, and showing up to these spaces. And on the adaptability part, for instance, Dark and I didn't even know each other a year ago. He's listening to a space one day. I said, hey, we need a quant up here to answer something. And now he's running spaces with 1,400 people in it. So don't like, this is one of the greatest opportunities in the history of mankind. Don't tell me you can't make earnings. I'll hire 2 people just to help me with AI. I continue not to, like, people don't go, oh, really, dude? Really? Let's roll. I mean, now you can't say, hey, look, here's my resume. I've been working in a bowling alley for 37 years and I want to do your AI. That's not very helpful to me. So I actually want to spend money. I'm going to end on the investment part. I want to spend money on teams and people in my community. And for 40 years, I've done nothing but build businesses. I'm done building them. I don't think the return's there, man. Um, I mean, you're going to have to be, the IRR isn't there. Like, somebody said time value money. Hey, try the time value of time. See, that's like, what the fuck are we talking about, dude? The time value of life, not time value of money. Who cares? We have the denominator upside down. Anyway, I'll end with that. It's going to be an awesome life. Okay. Like, go with this, fight it. If you're terrified, fucking find out why you're terrified about it, right? There's something I find it really, really exciting. So thanks.
Amen, Gary. Hey, BTC housewife, thanks for being patient. We'll go to you and then Vinny.
Absolutely. Thank you so much, Gary, for passing the floor. And definitely hats off to you. Like you said before, nobody gets rich by diversifying, you get rich by concentrating. So I'll keep my spiel relatively short. I'm in a car. I am a Bitcoin advocate and educator specifically on LinkedIn. I've been stacking since the later end of 2017. And recently I got laid off. That was 3 years ago. Well, I've been working for corporate America, climbing the corporate ladders. Worked for 3 years at the Federal Reserve Bank, San Francisco district, whatever. I've been stacking since 2017 because I know there's going to be one point that I will be laid off and I will not be able to have income. So I've been preparing for that sort of that moment. And fortunately, thanks a lot to Bitcoin, I was able to transition to a no job life pretty easily. And I've been pretty creative with with living off of Bitcoin, not just holding MSTY. I have a little bit of MSTY, but I've been very creative with borrowing, lending, all that sort of stuff, and a little bit trading. I also have rental properties from Waikiki. And recently, I've been having a leaking issue, and I'm thinking to, sell that stuff because, I'm not in Waikiki anymore, and I have to deal with that remotely, and it's definitely not fun. Anyways, so the reason why I want to speak here really quickly is because, me and another lady in Bitcoin analyst, we are working for the Bitcoin conference. We're helping them to create content on LinkedIn, specifically focused on Bitcoin with the Bitcoin Vegas conference coming up. So Analyst has been working in helping Bitcoin conference for the past 4 years, and I'm teaming up with her. One thing both of us have been observing is that all our Bitcoiners are super intelligent, super sharp people. We're having all these amazing conversations, but we're sort of talking to echo chamber. So we are hoping that we could bring more content, just like what Peg said. We don't want to be parallel to fiat. We want to be dominant. We want to be preferred, and narratives are important. Just like what I did, right, for the past 10 years, I've been selling my HSA, I've been converting my tech stocks, whatever, the RSU, whatever my company gave me, I sold them, I put it in Bitcoin. So I'm hoping my friends around me living in Silicon Valley or just, coming from around the world to the Bitcoin conference, I'm hoping we can, create more content, short form, long form, video, text, and just like share that gospel on LinkedIn, because that's where those fiat and paycheck trap people are. And that's where those retailers are who can help Bitcoin's network value to go up by, Metcalfe's law. So with that said, both Analyst and I will have a VIP pass. We'll have industry pass. We will be running around through different rooms to capture people. And if you're interested in talking to us, we'll have our camera up. We can do all kinds of form or content. If you're interested in talking to us, please reach out to me in my DM. I will hopefully can meet some of you guys there. So we will be posting mainly on LinkedIn. Thank you so much, guys.
Thanks, housewife. Hey, Vinny, you're up.
Yo, what's up, people? Yeah, great space today. It's sounds like I missed out on some of the spicy bits earlier in the space due to my fiat job, which I hope to quit someday, very soon. But yeah, I think the space is awesome. Just wanted to add a couple thoughts. Yeah, so we talked about entrepreneurship and we talked a little bit about Misty. Um, yeah, I mean, I have a decent amount of Bitcoin stacked, and if it does, in fact, hit like 150 or more by the end of the year, or even next year, I'll feel comfortable quitting my job and actually exploring like creating my own LLC and starting my own company and all that, which I'm pretty excited about actually. And Misty kind of extends my runway to where I don't have to feel the urgency to go back to work or run low on money. So it kind of supplements my income, right? I realize not everyone necessarily wants income or, already has a lot of wealth to where they don't need it. I think everyone's situation's unique. And I do think Misty does provide a valuable product to the marketplace. Dividend investing is not anything new, right? Like there's tons of people that are pure dividend investors. Yield max, it's not just Misty, right? They have all sorts of dividend yielding products for, all these different equities. And so Misty is just the one that like is the flavor of the month and performing the best at the moment. Um, but yeah, I mean, I do think that people that are buying Misty, what I am kind of seeing is that people are just kind of aping into it without really understanding how it works. It you really have to have a basic understanding of options trading before really buying it, in my opinion, because I mean, at the end of the day, you should really understand what you're buying, right? But yeah, it generates income through premiums through options trading essentially. And if you believe in MSTR, which obviously is buying Bitcoin, it's hard for me to see that it's going to zero at least anytime soon. And yeah, I'm on this gravy train until it looks like there's a bear market coming. And yeah, I'll land there. Thanks.
Matt.
Yeah, I think that's just a good spot to kind of return back to what Gary said, which is if you can't, in two sentences, say what your company does, then you might want to be considering looking at other options. And I think the same thing goes for these instruments. If you can't, in very quick terms, describe exactly what it is they do and how they work, it's probably not something you want to hold very much of. And I just want to reiterate, like, providing value for the world is never something that will lead you to a place where you're going hungry, right? Like, I think that's kind of the main point that I'm just trying to get at is even if your maybe specific thing that you do gets outsourced or changed or whatever, like having multiple skill sets that are valuable to people, I just don't think AI is going to be able to replace everybody. I fade that idea. So I know there's always change and there's always disruptions in industry, but I really don't think that we're going to automate everything. And even if we do have automation, there's still people that have to work on that stuff. So um, all I know is walking around in big heavy industry plants all the time, power plants, metals plants, chemical plants. Like that's what I've been doing for the last 10 years. And none of that stuff is going to be automated away in the near future at all. It would be a monumental task. So if you can learn how to work on some of that stuff or improve those processes in any way, I just see that being really valuable, especially if manufacturing does start to move back to the US in any meaningful way. So just kind of wanted to point that out for people. If you're looking for something, you're trying to figure out what you want to do, if you can learn how to work on shit, fix stuff, you're never going to not have a job. Like there's pretty much every plant I go to is short for people right now.
Dog said.
Yeah, hey guys, how you all doing today? Um, great space as always, Dark, and yeah, thank you for bringing me up. I kind of wanted to also mention, I forgot who it was that was speaking earlier, talking about being in the trades business. I think it was Matt. I've been in the trades business for 20 years. We have a roofing company here in Florida, and I gotta tell you, even though I'm doing well, financially, I don't see myself needing to retire, even if I could, because it keeps me entertained, but also it just kind of gives me some purpose, to my day to day life, and it allows me to continue working and provide for my family. And since I got into Bitcoin, one of the things that has been instrumental is that I feel like I don't have to work as hard because in parallel to my fiat job, the value of Bitcoin is actually growing really faster than what I can actually earn in my day-to-day job. And I think that has only happened primarily. One is because as soon as I started learning about Bitcoin about 4.5 years ago, I got my toes in the water. But then, through continuous education and learning, I started increasing my exposure to now where, I'm probably like 70% in, my net worth, and then the other 30% is in real estate. Um, and I kind of feel like for me it's a single focus, right? My single focus is work, earn money, pay my bills, and whatever overage I have month over month, I just stack more Bitcoin, over and over. I don't get creative. I don't try to learn a new technique, a new derivative product that, oh, I can make some more money over here. Because, once, at least for me, once I start getting creative, then that creativity gets smacked down with humility. And then, it just brings me back to the same focus where, you know what, this is what I know how to do. I know how to work. I know how to earn money. And I know enough to secure my future and Bitcoin self custody. Um, and so one of the things that I do, to kind of like keep myself at the cutting edge, obviously through learning about Bitcoin, and now I'm learning it at the node level where I'm running my own node, and like I'm starting to learn a little bit more about, code and whatnot, is split my time with also learning about AI and communicating with AI, and learning the nuances with Bitcoin. And I kind of share this because like it's not easy to hodl, but it's the easiest way to get ahead, because once you start getting all creative with other products, you can kind of get confused. And when you see other people talk about, oh well, I'm trading this over here and I'm gaining X amount percentage week over week by trading, that's a skill set that not many people know how to achieve. And so I just kind of wanted to echo that the long haul is the way to win in this. It doesn't happen right away. If you could only afford 1,000 today in Bitcoin, well, put in the 1,000, keep hustling, and then try to just, keep adding over and over again. And you'll see as time goes on, you'll start to be in a much better position where you don't have to grind the midnight oil. You can kind of, take a step back a little, but you're not giving up completely, because, like what I don't want to be 43, 44 years old. And now I'm like retired. And it's like, okay, well, now what am I going to do? Okay, well, if I go to the gym, okay, well, what do I do after the gym? It's kind of like, life gets boring at that point. And I don't think that's what we're meant to do. I don't think we're meant to just, live a life of breeze. I think we have to do our time, work consistently, and then with time and investing with your increased conviction, then the reward becomes, pretty generous for you and your family. So, I just kind of wanted to share that because I do relate, being a millennial, I still appreciate, hard work and working for a purpose to provide for my family. I still have that, mentality. And that's why I'm giving my kids, for them to learn something and to grow with it and to keep going over and over again, because, it has worked for me. And so, yeah, I kind of want to just share that.
Thanks, Dog. Really appreciate that. Yeah, I know people like Tomer, Puncher, and myself. I put in the same category. We all would have more Bitcoin today had we not tried to get fancy at certain times or think we could leverage it or do other things. Um, I think Eric, you had your hand up next, and then it looks like Peg has rejoined.
Yeah, this is a great conversation. One of the things I think Gary was talking about earlier with connections. The other thing is like you want to orange pill people, work side by side with them. I still remember my last employment gig. I ended up giving Christmas bonus was all Bitcoin. I just gave everybody Bitcoin, and a year and a half later, they all still own it and they've added to their stack. So it's another way to do that. But I
That
think
is the best Christmas gift,
absolutely, yeah.
flat out.
But
Yep.
there's where I could have had more Bitcoin, Terrence. But it's like this is how we have to do it. We all tipped our waiters at Steak and Shake. They all had wallets set up. I mean, everyone's kind of looking for this. No one has any money, and I think the important thing to realize is that one of the things that drew me into Bitcoin was realizing that this is not the first, the only $1 trillion asset that the average pleb front ran Wall Street ever. There's never been an asset like this. Now it's a $2 trillion asset. And if you think that Wall Street isn't trying to conspire together to figure out new alternative ways for them to hold your Bitcoin or to leverage your Bitcoin or to lend against your Bitcoin for the purpose of them getting your Bitcoin, you haven't paid attention to Wall Street in the past 30 years. Now
2.1 trillion.
2.1.
2.1.
Yeah,
Yeah. Don't discount that.
we're about to pass Amazon, right? As in total market cap. So if we're at that stage, understand what it is. For me personally, I am an entrepreneur. I took a job for a few years to get on my feet, learned a hell of a lot about that industry, and now can apply it to my own again. But I would say that anyone in this space looking for ways to accumulate more Bitcoin, figure out what you're good at, offer it as a service. Figure out what you've got of value, sell it in the marketplace. Figure out where you want to spend your time and who you want to spend time with. Go join that company and work your butt off and do the best job you possibly can. take your fiat, stack it. You know, one of the things I loved about Bitcoin a year ago, I don't hear much anymore, is just got done mining fiat, right? Like you're mining, going to the fiat mines to get Bitcoin. And now we're just looking for like these simple, easy ways to do it and easy ways to leverage it, which is normal. I'm not bashing anyone for doing that. It's part of growth of an industry. But man, I'll give you an example. This 22-year-old kid was working with me. He was listening to my macro overviews online, and he started taking all of his bumps or his commissions at work, and he would put it into Bitcoin. I talked to him a year later. This guy's 22 years old. He's got 1.35 Bitcoin. He's got 4.5 ounces of gold. You know, he's buckled down. He didn't buy a new car. He's not going out to fancy dinners. He's just saving and stacking. And like that is the model. If you're 22 or 42 or 52, it doesn't really matter. If you want something bad enough, you'll go out and work for it, and you'll save it, and you'll hold on to it, and you'll cherish it any possible way you can. But on the other hand, if you have a lot of money, products like Misty are good things for you if you balance it out. But just know what you're doing, and keep your head down, stay focused, man. Just work, earn money, save Bitcoin. Life's pretty easy.
Hey, Matt, and then we'll go to you, Nick. So you're up on stage.
Yeah, I was just curious. So I threw, well, I guess now it's back one post. It's the second post in the nest. We have a lot of conversations that I'd say span the net worth needs. And I'm just kind of curious where most people are at that do listen regularly. So I just threw a poll up. It's anonymous. You can reply to it by just clicking wherever you're at. I kind of would like to know where most people are at net worth wise that are listening, because it helps me to understand, you know, if most people are 0 to 10K versus a mil plus, like the conversation should be very different, right? So just
Yeah,
if you
that
could.
and that nicely, yeah. Everybody fill out that poll, and I agree 100%. Your quantity of scale really changes the conversation, and that kind of gets into um, what I was going to get at, which is first of all, I want to talk a little bit about the financialization side, and then my story as far as being an entrepreneur who got into Bitcoin, and then like Punch was talking about, having a hard time really eyeballing other opportunities better than this. So on the financialization side of things, you know, once the Wall Street people are starting to get a taste for this, right? They're incentivized. They're going to be incentivized to get as much as possible, right? And as I'm looking at the product offerings that are being rolled out, right? So we've got MSTR, we got strategy, right? Sailor was kind of the first one to really say, hey, I'm going to take fiat, I'm going to take out serious ass loans in a very public way and acquire Bitcoin. And what I'm going to do is I'm going to give my shareholders more Bitcoin per share. And then now we're kind of having, then we had the fixed income products kind of build off of that, the MSTY, the various ETFs there, and then Sailor offered kind of coming back on the risk curve, the STRK, which is his version of a fixed income, for lack of precision here. It's an income product with premium appreciation, possibly, without going into the details, but it's going to pay you, I think it was like 8% when it came out. So so you've got that on the risk curve, and then you've got Strike coming out, and Strike is doing all kinds of things. And what I'm looking at here is when you have Wall Street coming to the table, there and once they really start to appreciate what Bitcoin is, and really really want to acquire these assets, because as someone was saying earlier, we're moving into a future market where hard assets, and Bitcoin on the balance sheet of a business is going to be huge. We don't know what Sailor's going to do with that. Maybe it's going to be a bank, but big things are on the horizon. So that's all a long way of saying, on the financialized side of the house, I'm seeing that they're all incentivized to push out on the risk curve to get more Bitcoin per share, and they're probably less incentivized to do something that would be safer, like a Bitcoin bond. Like if you got $100 million and you want to say, hey guys, I'm going to offer, a fixed income bond of say 5% or even 10%. And I believe that I'm going to take, kind of like what Sailor's doing, I'm going to take the time risk, the volatility risk over time, that like 4 years from now, 10 years from now, I'm going to be okay. I'm going to give you this, yield of, whatever that beats the hell out of bonds percentage, that beats the hell out of, value stock dividends, because it's Bitcoin. But I don't know that the financialized side of the house is really incentivized right now to give those conservative offerings. So so that's one thing that we're dealing with. And then I kind of just to cap it off here, I ran my own business, in two sentences. I make fancy Xbox controllers that, like, help accessible people or help people cheat at their games. But I've been looking at the numbers and I'm like, man, I'm losing revenue, here. And I'm like, man, bang for your buck. Does it make sense for me to, shut down and just get income and just keep stacking on the side, or what's the best way to do it? So I'm having that conversation with myself right now. And it's real once you see the possibilities in Bitcoin. So that's my 2 cents for today, boys.
I would like to
Thanks, Nick.
propose we ban him from the stage in the future because he has made Call of Duty just completely unenjoyable for me with his cheat controllers. And now I
I
know
have
why.
86-year-old war veteran gamers that game 12 hours a day that couldn't have a quality of life without me. So yes, it's like a technology, all strokes for all folks.
Look, you're why my KD got worse. I get it. It's okay.
I'm sorry, bro. I'll hook you up.
Hey, Dark, you still there?
Yes, sir.
I know we're getting late, long in the tooth today, but I found very fascinating over the weekend how the conversation with you and Gary and Fred and others progressed toward kind of what I see as the end game. And we were talking at it about bit bonds, but the quality of the U.S. buyer, or no, I'm quiet, the quality of the U.S. 10-year Treasury buyer has gone down, and really not having new buyers for the 10-year is the end game. Now we can buy our own bonds, I guess. We can, but can you just run through that
Yes.
like a kind of
Yeah. So let's start
comprehensive?
with what is the
Yes.
problem, right? The problem is that there's no buyers for long dated US debt. When I say no, there's very few buyers. There's not enough to meet to meet supply. Um, Recently, there was a 30-year auction. U.S. government came in and bought, or the Fed came in and bought $50 billion, I guess, of the auction. Now, one can make the argument, well, they're trying to ease off on quantitative tightening. So as these bonds roll off, they're buying some of them back, right? But my reply to that would be a simple, well, if there was demand in the market, you wouldn't need to buy them back. The market would buy them. And since there is no demand in the market, you're needing to step in and buy them. And I don't understand why you would issue bonds and then have the Fed buy them. You might as well just print the money and take the Fed out of the equation. Why are we paying the Fed interest in that scenario? It makes absolutely no sense, right? So that's the problem, right? The problem is when the Fed buys our own bonds, then we end up paying the Fed bankers interest for no good reason. And they're losing billions of dollars anyway. So I'm not sure what the whole purpose of the Federal Reserve is. So what we've been talking a lot about lately is structured products. Now I don't want to get back into Misty and that whole argument, and I know what Gary said, but I'm going to say this: that if you understand what MicroStrategy is doing, right, it's not much different than what Misty's doing, and that what we're proposing be done to help the US government, which is monetizing the upside CAGR and the volatility of Bitcoin. It's that simple. There's a reason why Sailor's been able to turn a very small $1 billion company into a $100 billion company in a matter of very short period of time. He's done that by monetizing the CAGR and the volatility of Bitcoin. So the next question becomes, well, if Saylor can do it, and now he has this product Strife, which is just basically a fixed income product that's paying a 10% 10% interest, 10% yield, right? Well, if he can do that, right, why can't the US government offer the same type of product? Right. And that's where we've kind of come on to this. Well, what is 21 all about? Why Cantor, SoftBank, Tether, right? Why that combination between Tether, SoftBank, and Cantor? You're dealing with bond firms, right? Those are bond firms. Tether buys bonds and issues stable coins. Cantor is a primary dealer of U.S. Treasuries, one of very few. And SoftBank borrows billions of dollars and invests in. So they're all in the issuance slash lending borrowing business. And what we've kind of landed on, thanks to Marilyn Hoddle, was this concept that, well, they're going to come in and they're going to create a sailor type product and offer it out there both to large corporations, institutions, and governments, right? And it goes something like this, right? Rather than the traditional bit bond, the way we've discussed it, what we're talking about now is a structured product, a product where Cantor goes to the U.S. government and says, "We'll loan you money for 10 years, 30 years, right? We'll take that risk, and we'll do it at a much reduced coupon to the market." They then, in turn, flip around and they basically make the micro strategy play. They monetize the upside CAGR and the volatility of Bitcoin, and they're able to offer to investors a greatly enhanced yield, a la Strife, right? So imagine a situation where this this consortium is essentially loaning the government money for 10 years at 2%, 1.5%, and then turning around, combining that product with Bitcoin, and then offering an 8 to 10% yielding product to their investors, to the people that actually buy the structured product. So they're fully interpositioned. The government has absolutely no involvement in the Bitcoin. This is how this is how we envision it starts, right? The investor potentially has no direct participation in the Bitcoin, and of course, the 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 consortium 21, they get to control all of the Bitcoin. Which, by the way, if you look at some of the suggestions that have been made, and where Maller says we're going to have more Bitcoin than Saylor, well, this would be one way to do it, right? Would be to create a structured product company that essentially lends dollars or to institutions, and then goes ahead and finds investors for structured products. So I hope that's kind of a decent summary. Puncher, any questions?
No, I saw Dave came up. Would like to get his thoughts,
Hey
but yeah,
guys, can I
and
chime in?
I think
This is Peg. Can I chime in real quick?
yeah, yeah, Peg, go ahead.
And just a little bit of context. You know how we always say slowly versus suddenly, or slowly then suddenly? Everybody's house has gone down by about, in value, in Bitcoin value, everybody's house has gone down by about half over the last 12 months, certainly by 40% anyway. Um, there's a money glitch. I was actually going to try to save Dark some of his breath, because he's said this so many times. There's a money glitch. Things aren't happening slowly. They're happening suddenly. There's a money glitch between the value of the dollar going down and the value of Bitcoin going up. And it's possible to monetize that volatility if you're smarter than me, if you're a trader smarter than me, and if I choose with a small percentage of my portfolio to invest in Misty. There are people smarter than me who are cowboys, and any of us who've been in Bitcoin for a while remember what the weekends were always like. Everybody always said, don't do anything on the weekend. The weekend is for cowboys only. And what do you think this weekend was? Cowboys. If you watched it at all, and I'm sure nobody here watches the price of Bitcoin, but It flew up, it flew down, it was all over the place. What do we really think that is? We know that has to do with the word volatility, which we've heard in every speech that Michael Saylor has given for the last long while. And we know that Misty has his blessings. And I don't know what you do with your dividends, but most of us, I think, are using the dividends to probably buy Bitcoin. This is budget neutral, right? So I think some of us understand what's going on, and I expect every weekend to be for Cowboys. I don't trade. I've lost, I have my stack, but I certainly lost half my Bitcoin thinking I was smarter, right? I don't trade, but do I take a small percentage of my portfolio, that portfolio that's in IRAs and 401ks, which I'm lucky enough I have a couple? Do I take a small percentage and put it into Misty to help support what we're building? I do, a small percentage. And I know there are cowboys smarter than me who are making this work. And I know that it's only for a point in time. This is not gonna be forever. But I also do, in the back of my mind, think we're beta testing future annuities, which ultimately won't all go to zero because they'll be backed by Bitcoin. But we've had that conversation many times. And I know we're going to go around and say goodbye. And this is my goodbye. Thanks, guys.
Thanks, Peg. Not so quick. We're not
Thanks,
leaving
Peg.
just yet. So, Dave, before,
Hey, Dark, real
yeah,
quick. I think Peg mentioned the budget neutral because a lot of people think that somehow what you described pertains in some way to the strategic Bitcoin stockpile, or that you'll need Congress to pass. And people keep missing that. You want to talk
yeah,
about
real
that?
quick. Again, we're talking about a third party. Let's just use 21 as an example, disintermediating the issuer and the investor from the Bitcoin, right? Essentially being, it's a different version of the same trade that Michael Saylor has used to absolutely create a fortune, right? As is Misty, by the way. It's just a different trade of the same concept that Saylor's using. So, yeah, the concept again is a structured product where the 21, we're just using 21 as an example. We don't have any inside information. Where they actually are leveraging, for lack of a better term, they're going to leverage the issuer's credit rating because they're 90% of, just let's use an example, 90% of the money that they're lending is going to be held in treasuries, right? And then they're going to take the 10% of the Bitcoin and they're going to monetize that and create an enhanced yield product that the government could not offer to the investor. But on both sides, both the investor and government are completely disintermediated from the Bitcoin. Dave, I'd love to get your take. I know you and I haven't talked about this since we've kind of thrown it out there. What's your thoughts on this type of structured product?
Well, I have two things. First, I wanted to talk a little bit about weekend volatility because it's different today. There have been three basic regimes in weekend volatility in crypto, and they're all very different. There's what Peg was describing, which is accurate, and there's still an undertone of that today. But effectively, that was basically the days when all price action were led by derivatives, and the weekend had the lowest spot, and so the easiest to manipulate was on the weekends, and so you would see. What we would call momentum ignition sorts of trades, where you would either long or short the spot, having previously established a futures position and look to profit off of that. That existed for years. That, I wouldn't say it ended, but it became really unprofitable when the spot led buying started as soon as the ETFs were, so about a year ago. And then, we had the other big hit, which was the Silvergate being closed and the Signature being closed, which basically stopped all the market makers from being able to play in dollar, which was their bailiwick, in dollar-based Bitcoin dollar, over the weekend. And so everyone had to migrate to Tether, and that took a while. So during that period of time, weekend volatility just went absolutely crazy. Today, what happened yesterday would have been really, really, really tame 4 years ago, because in percentage terms, you're talking about 3 or 4%. I mean, 103,000, 107,000. It feels like a lot because it's $4,000, but it's not like it was 20,000 to 24,000, right? It's a big difference. So in percentage terms, it really wasn't that big. What you have, however, you have is people hearing news, trying to front run what they think is going to happen on Monday, and then looking down and there's nobody with them. And so, we saw a little bit of speculation. We saw some stuff from the hyperliquid guy, whatever, and things moved because there wasn't anyone to sell. And then Monday morning happens and the markets are a little soft. And guess what? There's no one there. And so, boom, right back down. Now, of course, if you look right at this instant, it's retraced more than half of that move. And we're back up over 105,000 again. And so the people who speculated and pushed all the way to 107 were just way early, irrational speculators who got carried out. But if you actually look at the main thrust of that move, we're right there, and that's with a flat stock market. So, it's not about being smart; it's about not being dumb. And so, if you don't chase things, if you watch the book, there are some great follows out there. Dom is a great one. Follows is another one on the altcoin side. These are people who are understanding technical levels, share their thoughts. I think you want to look at it that way. So that's just my public service announcement for today. Understanding weekend trading is really about understanding order book dynamics and what's going on in all of the other markets, and not just kind of randomly just leveraging up and just aping in, because when you try to do that, you get carried out more often than not. Okay, so PSA out of the way. Bit bonds. I think that your structure is an interesting one. I'm not going to lie. I think it is interesting. I just think that with this administration, to the extent that they can figure out a way to budget neutral accumulate Bitcoin, they're going to do so. I think that they believe you're buying Bitcoin at a very significant discount. And if there's one thing that Donald J. Trump loves, it's buying stuff cheap. He's the ultimate vulture when it comes to retail. And I mean this in a good way. And, this is not a bad thing. I'm not a criticist. Yeah, I could criticize things, but this isn't one of them. Buying things cheap and selling things expensive is smarter than the other way around. And I think that the government doesn't want to wait for a huge congressional battle, and they're going to use all of their leverage on getting their budget approved. They're not going to, it's not you're not going to hear anything about Bitcoin Reserve until we have a budget, until the debt ceiling is not an issue anymore. To the extent they can do things, they will. So what do I think? I think the most likely scenario, if they try to go ahead with something, will be some version of a zero coupon style bond where the government splits the Bitcoin exposure to the upside with with the providers. I don't think they're going to let the providers, whoever that might be, if they can get a product like this off the ground. I don't think that they're going to do it with zero Bitcoin exposure. I think that kind of is the opposite of what they want to do. But I think they do, however, want to do things in a way where they could say, "Listen, we've lowered our interest rate by 3.5% from what we would have been paying." And so what they want to be able to do is put 3.5% of the proceeds into Bitcoin. I think that's what they want to do because that's revenue neutral, and they think they can do that. So we'll see how it all plays out. But just for people listening, understand that principal protected strategies of sorts are very simple. What generally happens is the creator buys a zero coupon bond, so you get your principal back over whatever the time frame is, and uses the proceeds generally to buy options. It doesn't have to be options though. They could just use it to buy the asset or some combination of the two. And so, however this gets created, it's really a question of getting over the hump. Can they do it? Because if they can do it, I think they will do it, and I think they'll do so in a way to increase and stack sats for the government into their version of a reserve. But we'll see. I mean, I have no inside information. I don't think you do either, and so I guess we'll all see. But it does seem like a rational idea, at least, if the demand is there, and it looks like that's true.
Yeah, I definitely don't have any information, Dave. But yeah, to your point, I think that's where this is going, right? The government wants the Bitcoin. I'm not sure if the first iteration goes that way. Maybe it does. Maybe they can structure this. Look, they're not going to be able to get anything through Congress that involves the U.S. Treasury bypassing the Fed and acquiring Bitcoin using treasuries. Like that's just not going to happen. So, if they can figure out a way to do it in such a way that, they have no risk and they get an upside kicker of Bitcoin, absolutely. I see that. But I do see this structured product as being a way to do it. And again, remember, this is an end run around the Fed. This is the Treasury borrowing money directly from 21, which I think is a fascinating concept, and doing it at a much better rate than the Federal Reserve System can afford them. So, yeah, look, in the end, I just want to bring this back to Sailor for a second. It's the same trade, right? Like, it's the exact same concept. You're going to monetize the upside CAGR of Bitcoin and the additional kicker of the volatility, and you're going to create products that enable the issuer and the investor to both win, with the middleman being, utilizing and running the Sailor strategy.
Does anybody know if anything regarding the Bitcoin strategic reserve is in the big beautiful bill that passed out of committee?
I do not believe so.
Okay. Because my thinking is, if this bill doesn't pass, and if it did have it in there, um, the government, the administration could go to the American people and say, look, we tried to go through Congress. It didn't happen. We have another option. That other option is we're going to go to 21 and borrow the money at a lower rate, 0% in Dave's example. And then you've got the political cover to do it, right? We're going to start reducing the debt and deficit. The traditional ways don't work anymore. We can't borrow 4.5 from the Fed. It's too expensive. It just raises the interest portion. It's unsustainable. So we're going in this direction. I don't even know that they need political cover. I just don't know the mechanics of that and how it would actually happen if 21 was the lender to the United States Treasury. Does Congress have a say about that? I don't even
Hey,
know.
Dave, quick. I don't think, I think that they don't, as long as the Treasury's not getting involved in Bitcoin. But just going back to where we started, before you hopped up on stage, Dave, we were talking about, the government buying, the Fed buying 30 years and 10 years. I think it was something like $50 billion as part of the QT unwind, if that can make any sense to you, but I guess it does,
It
right?
does.
Yeah, they let 70 billion run off and they buy 50 billion back. But here's my question, right? Why not, if you're going to do that, right? That's just like basically coming to me and saying, hey, look, we need you to loan money, we need you to pay interest to the Federal Reserve, right? Because if the Federal Reserve is buying our bonds, that means we're paying interest to the Federal Reserve. Why don't we just print the money and not pay the interest? Is there, can
Because
anyone?
really no mechanism to do that. I mean, we always talk about printers coming and monetary printing, et cetera, et cetera. The mechanism is via the Federal Reserve System, and that's one of the reasons the Federal Reserve System was established. to
But
be to
doesn't,
be blunt, because it's not constitutional for the Treasury just to mint money that's not backed.
so the
It's a
only way, we can print money as a society is to pay a bunch of, Fed scammers, bankers interest in order to print the money. In other words, we have to pay that. We have to give them five
we
percent
can
in
let's
order to
phrase
print
it.
money.
That sounds, yes. You're factually you're right, but your rhetoric brands you.
Good.
It doesn't sound
No,
it
I
doesn't sound
understand.
beautiful.
Well, I mean,
I'm
if
a fan, Dark. I'm a fan.
no,
Let me
I
tell you.
love.
By the way, are you going to be in Vegas? By the way.
I am. I live in Vegas.
Okay. Well, yeah,
Are you coming
definitely.
out?
Yeah, well, the World Series of Poker aligns with the Bitcoin conference, so that pretty much guaranteed I was going to be there. But that's a
Oh,
different
super.
story.
I'll hit you up on
But
the
I'll
side.
I'll be hanging out with the Arch Public guys there to have an area next to the whale area. I'll be over there a lot of the time, but definitely DM me because we should
Yeah,
get
I'm gonna.
together. But in any case,
I'll do you. Look, as to my rhetoric, look, that's my
no.
account.
Let me explain
Right.
the point. So, look, the reality and the financial history of this is I'm not 100%, but I'm pretty close. Is that the way the government can finance whatever the hell it wants to is to issue bonds, full stop. They can issue bonds and they can issue bonds and they can issue bonds. Yes, we print currency, but printing currency, it used to be Federal Reserve notes, were backed by gold and silver, and then we said, you know what, you don't have to back it, you can just print whatever you want. But printing whatever you want is done by the Federal Reserve. It's just that was what it was set up to do. It's kind of a janky structure. And the reason they did it was because of the way the Constitution, the way everything was set up. And that's why in 1913, there were all these arguments. That's why, by the way, there was an argument with Andrew Jackson in the very first bank in the United States. It goes back even farther in history. What is not well understood is that they made the Federal Reserve, and they had to because of negotiations with J.P. Morgan, private. And even though it's a political appointee who, quote, runs it. And so that's where people get their knickers in a twist, and correctly so. I personally find it reprehensible that we give so much power to a group of private bankers, but it is what it is. And so everyone who talks about Federal Reserve independence as if it's some holy grail, well, you could make an argument that setting the banking rate should be independent from political pressure. But the fact that you have 20,000 people working in this massive organization that's all politically independent, the only person accountable is the one person appointed by the president. Well, I mean, that's insane. But we accept it because the political establishment knows that they are the way to monetize the deficits that they're all addicted to. So when you start looking at the why, it's simple: follow the money. And the money says you need them if you don't change the laws. And changing the laws these days, given the fact that two parties they couldn't agree. I mean, it doesn't really matter if Trump said, down is up or up is down. They would say down is up. Trump, it's like they just can't agree on anything. And so as a result, this is what you have. So it's part of our political dysfunction for sure. But the reality is the Federal Reserve was built to be the banking system that the federal government can influence. And it really is that simple.
Right, but in the end, I'm correct in saying if the U.S. government wants to print money,
But they don't ever want to print money. I think you're getting another call. The U.S. government doesn't want to print money. The U.S. government wants to issue debt, have it, and have it at as low an interest rate as possible. They're borrowing it. They're borrowing money. They're not printing money. The Federal Reserve monetizes debt. They use various ways. When QE happened in 2008, under Bernanke, and it's still there on YouTube. One of my favorite YouTube cartoons of all time was about the quantitative easing. Uh, they started, that was real monetization, and they got away with it, and it's still running to this day. So it's not about printing money. The printing money is to facilitate the banking system. It's not to fund the government. To fund the government, they have to issue bonds. I think Dark got a phone call.
Dark, yep. All right, guys. Well, it's getting close to 11 o'clock. Let's go around the horn. India, you just came up. What do you got, buddy? India, can you hear me? All right, let's go to Kirby. I think you had your hand up, Kirby. I can't see hands. I apologize. No, it's fine. It's fine. I'll be quick. I put my hand down, but just to go off of what some other people said, and I'll make this very brief because I feel like I'm repeating myself amongst others. But yeah, I got in a while ago in my 20s, and I feel this is great advice for anybody who's young or even old. But like 4 or 5 years, really don't go out, don't do anything, head to the grindstone. um, I actually slept on my couch and I Airbnb'd my bed out, to be honest, and it made me like a huge lump sum. And just a quick question for you. So yeah, just save all of that stuff in like 4 or 5 years, definitely be a millionaire. But for you though, I'm afraid that with UBI and everything, and automatic payments per month with a lot of automation, because I am a business analyst. Do you think that's going to affect in about 10, 15 years from now, people utilizing Bitcoin when everybody's getting like a free paycheck or a check from the government, or most people are displaced? That's it. You're asking me 10, 15 years from now. I can't tell you what's going to happen next month with any degree of certainty. So maybe a question for another time. Dark, you back up? Sorry about that, Kirby. I just don't know. You with us, Dark? All right. he's changing the world. Dave, what do you got? Any closing comments? I mean, I feel like the quickening is happening here on all fronts, but
I
not quite
I
sure
think today
what
I
direction
think
we're
today's
headed.
price action is very constructive. I generally think longer term than single days, but it just feels to me my spidey senses went crazy when everyone last week in the crypto world was saying, following Josh Mann and talking about, hey, the technicals say we're going to fail, and then we had mass bearish divergence from this kind of fake spike this weekend. I like being contrarian anyway, so I'm happier there. But it feels to me like there's a lot more demand for Bitcoin than there is supply right now, and that needs to result in higher prices. I mean, I know that sounds stupid. It sounds very sophomoric, but that's how I feel. And generally, I would not be saying this because usually going into the Bitcoin conference, the market tends to be soft to cratering because it's seen as a big party, yada yada yada. But this time, I don't think the people in the Bitcoin conference are the ones that are buying Bitcoin. I think it's the others. It's the people who look more like me as opposed to act like me.
Hey,
I'll
For
plus one
sure.
on that on my
Hunter,
way out. And there's a lot of OG hodlers who are cashing out at 100, and it's happy for them. I was seeing the same thing that Dave was seeing as far as the spike up over the weekend. And yeah, I think it's solid fundamentals going into the conference. I'll be there, so looking forward to seeing everybody. Say hi, and yeah, next week later.
hey, Hunter, can you hear me?
Thanks. Yeah, I got you, Doc. Go
All
ahead.
right, somehow I lost my connection through my phone. So just to go back to what we were talking about, Dave, I'm still like out of my mind that the only way the U.S. government can print money is to pay an interest payment, and what is a substantial interest payment to the Fed. There has to be a better way. Can aren't I correct in that the Treasury can borrow directly and bypass the Fed?
Yes, Dark. The Treasury issues bonds. They don't have to do. Mechanically. I don't know or care. But the Treasury is one who issues bonds. That issuance of bonds is borrowing. So the Treasury borrows.
But
Treasury can't print.
like for
I mean,
instance,
they mint money, but they don't print money. There's a difference.
could the Treasury issue bonds directly to a buyer and bypass the Federal Reserve?
I don't think that when you do Treasury Direct or you go through Treasury auctions, the Federal Reserve's involved, are they? They don't have to be. I mean, they can be. They
They
are.
weren't when I did it.
So
Well,
here's a question: Why would the Treasury, as part of this stablecoin bill, because stablecoins are essentially cash, right? They don't pay interest. They act like cash. Right? Why wouldn't the Treasury go to the stablecoin companies and say, look, instead of us paying you 5% and letting you just keep the money, we're going to give you 1%. And we're going to issue these directly to you. If you want to have a stablecoin, you've got to buy your treasuries from us.
I don't know. I honestly don't understand the Treasury issues bonds with a coupon. It is what it is, and it's out
Right,
there for everybody.
right. But we also give the license to enable people to issue stablecoins.
Yeah, but the current version of this bill has no yield to stablecoins whatsoever. So whoever
Exactly.
issues the
But that's my
stablecoins
point.
will pocket the money for a year, 6 months, whatever, until people get smart and they realize that the same issuers of stablecoins won't be paying yield, but can offer interest-bearing tokenized funds on the same platform and free automatic sweeps
Yep.
to people who want that. That's going to happen. I don't know how long it'll take, but it will happen. So whatever. But I don't. I still don't understand the question. The Treasury Department. Um,
Well,
the Treasury Department issues bonds. Could they issue a bond theoretically that has a Bitcoin component? Um, I just asked Grok your question just to be specific. I'm getting a predictably long answer. The first one was yes. It was yes, but, which is sort of my answer too. It says here's your conclusion: the Treasury has the legal authority to issue debt independently, as confirmed by, whatever result in the Second Liberty Bond Act of 1917. The process, primary issues Treasury bonds, occurs through auctions managed by the Treasury, not the Fed. Circumstances bypassing the Fed is possible in extreme situations, such as direct issuance to foreign governments during war financing, but is not the norm due to the efficiency of the auction. Phrased differently, I mean, now this is me, not Grok talking. What they're saying is the Fed is the buyer of the last resort in the bond auctions. So they really don't want to bypass them. But were there demand, they could do so. Were we to decide to offer, it just said it, even in Grok, were we decide to offer a auction off the run to Japan, I mean, we could do it. They wouldn't buy it, but we could do it. So the answer is yes, they can issue bonds.
Interesting.
Or they're
Very interesting.
Right.
That kind of plays into our thesis for 21 and a structured product.
I mean, as I said, I think that if they're going to get clever, they're going to get clever trying to accumulate Bitcoin,
Yeah,
not trying to just goose things.
completely. No,
I do.
I completely agree.
I think they're more interested in
but
buying at
they
a
have to get
discount.
past this.
That's right. And so I think that there's some stuff going on now that is capturing their attention. But we're not going to know. The other thing that I've said, and you've heard me say this repeatedly, Dark, if the U.S. government is figuring out a way to buy Bitcoin, you're not going to know about it until they've accumulated a sizable amount. You won't know. I don't believe they're doing it, by the way. So let's just be clear about that. But we won't know because only an idiot trader would actually declare your intent to buy something before you buy it. And our Treasury Secretary is literally the polar opposite of idiot. He may be the best, most knowledgeable trader we've had in that situation ever, or at a bare minimum, he's at least the equal of Robert Rubin, who was an exceptionally gifted trader and understood markets really well. We haven't had people like those two in a while.
But David, now I am confused. You know, the accumulation, unless it's revenue neutral, may or may not be going on behind the scenes. And I agree, we wouldn't announce it. But in what Dark's talking about, the government doesn't get any
Yeah,
Bitcoin. The
that's why I
Bitcoin's sitting.
dispute it. They'll only do so. I think they would be willing to do so if Bitcoin was at 500,000 and on its way to a million, not at 100,000 where people are speculating that it's worthless. I think once it gets to a critical mass, if the goal is to just decrease your interest rate, that's something you can do when Bitcoin has 5x from here if you think it's going to 10x.
Yeah, but
At this point,
they're not taking the risk.
that's what I think.
21's taking the risk.
Yeah, but does 21 have, or anyone you mentioned, do they have the scale to
SoftBank,
SoftBank.
absolutely. Yeah, for sure they do.
need to dump? That was my wife knocking me off. We have a vet appointment
Yeah,
for
we were
my
saying they do
gotta run.
with. Oh, sorry, Dave.
Sorry, guys.
Yeah, have a good one, bud. Thanks for coming up, man. Appreciate you coming by.
Cheers,
Ciao.
Dave. Thanks, bro.
Yeah,
Well, that's Dark. My point, and I think Dave would have said, um, look, the whole idea, if there was a political angle to this, or if there was going to be some pain, like for example, if the Treasury under percent said we're gonna do business now at 0% with 21, of course there'd be a political, everybody would be up in arms, but the, Trump would just walk out and say, look, I've got almost like he did with that airline from
oh, for
Qatar, I
sure,
think that
for
they
sure.
offered. He'd say, "Look, would you borrow money at 4.5%, or would you borrow it at 0%? I'm not a dummy. I'm going to borrow it at zero
Yeah,
percent, and that would be the end of the
yep.
argument."
And by the way, just to go back to what I was saying, if you're not angry enough about the Federal Reserve System, when they buy back those $50 billion of bonds, right? Realize two things are happening. One, they're monetizing debt, but worse, we still have to pay the interest. Right? We owe that interest payment to the Fed because they now own those bonds. Right? So we're paying them 5% interest for the pleasure of being able to debase our currency.
And that is the problem. The problem is the interest we're paying on our debt is why we can't get out of the mess we are in. It goes directly to the heart of the problem. We can start to reduce the interest payment the United States of America has on its debt, which is the overwhelming majority of why we're in the situation we're in. We can't afford to keep borrowing money at those rates.
Yeah. I mean, you just don't hate these people enough. All rhetoric aside. I mean, it's just literally that concept that we're going to debase our currency, which is a tax on every American, and then we're going to pay them interest on top of it for the privilege is so outrageous It should outrage every single person on this call and every single American. We are getting screwed coming and going.
And I guess maybe the only counter to that is you do also have to have some kind of a real market rate, right, for borrowed money, and the government has to kind of abide by those market rates too, right?
No,
No,
no, they do not. No.
no, that was the
Go
point we were
ahead,
making
Doc.
with Dave. If the Treasury wants to issue debt on what they call on the run, meaning away from the Fed, they can do it. Right?
Right, but
If
we
somebody
still have.
came by, if somebody came by like 21 and said, "Hey, look, we'll do $500 billion of 2% debt," they could write it up and do it.
And just undercut the Fed.
Can put bypass the Fed. That's why
Okay,
it's
that's
called
dirty to me.
that's why it's called on the run.
Sure.
Right? Like that's the entire concept here. What we've been kind of putting forward is a way for if you're Trump and you hate Jerome Powell almost as much as I do, right? Then you want to make an end run. Trump's not stupid. He understands this concept that when we monetize our debt, we also have to pay interest for the pleasure, which is
Yeah.
ludicrous. It's
What?
stupid.
Yeah. The other component is also the volume, though, right? You have to have an entity big enough to absorb the volume that the federal government's dealing with, right?
Yeah, well, no, you don't have to. In other words, you're not completely doing away with the Fed. It becomes a slow, gradual process, but you got to start somewhere. So if you start with, I don't know, $100 billion, right? Relatively small potatoes to
Right.
the Fed.
It removes the monopoly. You're essentially removing the Fed's monopoly.
Yeah, well, you're at least issuing. You're creating one new player in the space. But what happens is when 21 comes in, let's just say they'll do a 10-year bond for 2%. Okay. Well,
Hmm.
I mean, the Treasury would be silly not to take the deal as
And
long as
then they'd want as many as they can.
right.
Yeah.
And now in turn, 21's going to take that debt. They're going to leverage the AAA credit rating of the U.S. government. They're going to include Bitcoin into the sauce, and they're going to go to investors and say, "We have a 7% product."
Yeah.
Right. Well,
The other problem also would be what does that telegraph to the rest of the financial system and the entire world's financial system? Because whether or not we like it, the Fed is kind of the branding, the face of it's our Federal Reserve notes are our dollars for all of us. And if we're going around or undercutting our own institutions, I suppose that could possibly telegraph weakness.
what does it say when Trump comes out and calls Jerome Powell an idiot?
Sure, but the people who are pulling the triggers and pushing the buttons at the end are looking at more numbers and less rhetoric, right?
Okay, so look,
Yeah, but they can't match the deal. At the end of the day, they can't match the deal. That's it.
the other
Sure.
thing to
I
consider is
agree
that
with that, but the
this,
entire financial
yeah,
system
no,
is dependent on some level of trust, right? And if we're
well,
telegraphing that we
but
don't trust,
Fannie Mae and Freddie Mac are doing this every day. They don't
yeah.
all the debt they issue. They don't go through the Fed.
Nick, the credit agencies just downgraded U.S. credit. What do you think they're trying to tell you? They're not trying to tell you that we can't print money to pay back the debt. What they're telling you is the money's no good.
Well, they're also telling you one other thing, Puncher. Well, we really can't print the money, right? What we just went through. Every time we print money, our interest expense goes higher, right? Like this is the misnomer that people don't understand. When we say the big print, right, that comes with big interest expense.
Yeah, and it's actually interesting that you bring that up right now because I was thinking about that because the original plan was for Besant to kill the 10-year, right, to bring those rates down so they could refi the whatever it is 6 trillion or is it 10 trillion over the next 6 months, but it's like a significant percentage of the entire world's money has to be refinanced in the next few months, and they were hoping to do that via treasuries. That's not happening. So I was asking myself that, like, what is Plan B? What are they going to come up with? Because they're going to need one, right?
Well, again,
You just heard Plan B.
if I'm the Federal Reserve, Okay, let's just imagine we're all a Federal Reserve banker. What do we really want to happen? What's the best scenario that could happen to us?
Probably the system continues as it is, right?
Well, beyond that, let's talk about this refinancing that you're talking about. If you're a Federal Reserve banker, what's the ideal scenario? Is that they
the,
don't?
the that gets refinanced at some rate that's high, but also low enough that it
No,
doesn't create a permanent debt spiral that destroys the whole system.
no, they don't give a shit about us. What they care about is they would love to see a scenario where not enough buyers show up and they have to buy the debt. Because if they buy the debt,
Fair.
then we
Yeah.
pay them the interest. Right? Their
Until
incentive.
the system collapses, and that's why Bessent's in there, right? Is
Well,
because he was afraid of system collapse.
I don't understand. Like you'll have to explain to me
Yield curve
how the
control.
system doesn't collapse. Under that, if you believe that monetizing of debt is a system collapse, I do. Like I'm of the opinion
Hey,
that every yes, sir.
Dark, your Bluetooth,
Doug, if you're on a
your
head,
Bluetooth is
yeah, your
messed
headset.
up, bro. Can I send you a new one?
No, it's not that. It's my phone tripped out and I'm on my computer. Is it better?
No, it's terrible.
Okay.
You
I'm gonna.
sound like a 9mm machine gun.
Yeah.
And I guess the point that I was only trying to make, and I'll just fill air here while Dark is doing that, is that we as Bitcoiners are pretty extreme, and like the rest of the world's bankers are not nearly as extreme as we are, and they have just a certain level of stability or the status quo that they're comfortable with in doing everything that they're doing, and that's where Besant's been great as just being someone who recognizes a very big problem and is calmly telegraphing plans to fix it.
Yeah, but none of his plans outside of these structured products make any sense. They all end up with a broken system where essentially we're paying the Fed to buy back their own Kool-Aid. It's yield curve control. It's a fugazi. It's a joke.
Yeah, and
And if you want,
it's always been that way, right? But it's just a matter of how much can we tolerate, right? How much of the steroids can we take before the body dies? Um, but this is what Dalio's been preaching about. He's been saying they're going to monetize the debt, and the only way out of that is if we get our financial house in order and get a hold of that exponential growth of the debt with that interest rate that we're talking about, which is freaking the interest on that debt that's the debt spiral. That's what we got to fight. And so they're trying to, get spending as a percentage of GDP brought down and under control, trying to get a certain percentage of growth, and then refinance the debt under a certain percentage. And that's the plan to get out. But if we can't refinance that debt, which it's looking like that's what we're bumping into, here we sit.
Is this any better, Puncher?
there you go. That's way better,
Okay,
Doc.
cool. Look, I mean, you're hitting the nail on the head, right? Like we're running up against it. And I was just going to say before I had the headset problem that in my personal opinion, 08, 09, the system collapsed. Then they changed the rules. Every time you change the rules, to me, you've collapsed the system, and now you have a new system. Right? In 2020, they collapsed the system again, created a new system, zero reserve banking. Right? And I think we're coming up to another system collapse. Right? But again, like if I'm Trump and I know there's a big print coming, I don't want the big print to be through the Fed. But why would I want to? Why would I want to jack up their interest? Why are we paying them interest? They're the ones who got us into this mess, or at least participated in getting us into this mess. Obviously, Congress spends the money. There was a lot of people involved, but I just I don't get it. Like the entire concept of interpositioning the Fed when the Fed is losing billions of dollars. Up until I think it was 3 years ago, the Fed used to make a payment every year to the federal government on their profits. But now that interest rates have stopped going down and they own all of this crap, right? That's losing money every single day. They lost money today as bond yields go up. right now we're going to have to socialize their losses, which are in the God tens, if not hundreds of billions of dollars now. I think hundreds.
I'm reminded of the movie. I can't remember what it is. Where like there's a ticking time bomb, and you can scream and yell and argue and say it's not fair, but the guy holding the solution to get out of the building that's about to explode looks at you and says, "I need you to decide. You have 30 seconds." That's where we are. And if you don't think this administration has the gumption to do things outside the box that are quote unquote non-traditional, I think you're misunderstanding who Donald Trump is.
And to riff on that, if there's anyone who does pull rabbits out of hats, it's often Trump, right? And we might just be at such a moment. And I also agree with Dark's framing on, we did have a structured reset or a re-agreement of how banking is going to happen in '08, right? And then again with the zero reserve, that is a significant change. And yeah, you're 100% right. There's a bomb, it's ticking, and we do have to make it. We got to clip the red wire or the blue wire or something.
That's right.
Yeah, yeah, we're right there. So,
All right, Doc, you there, buddy?
hey, Puncher, you're gonna
All
have
right.
a couple things. One, I got a hands-on probably some free general admission tickets to Vegas. So if anyone's like on the fence, maybe hit me up, or maybe we could do them in a raffle or a giveaway on the Bitcoin Today. Pick a day this week. I just want to throw that out there. And then yeah, looking forward to seeing you guys.
Likewise, man.
Yeah, Nick, that'd be awesome. That'd be awesome. We gave away a couple tickets. Shaquille Oatmeal gave away some nice tickets to folks. So maybe we'll do that tomorrow or during the week. We're getting in short hairs now, so anyone going needs to make
Oh,
arrangements
and
for sure.
I got to get another
Doc,
one of your T-shirts, Puncher. That was the other thing. I was wearing my T-shirt from you. I'm like, oh, this dude's about wore out. I'm gonna need another one for Vegas.
I'm gonna bring. I have a lot left over,
Good deal.
so I'm gonna try to find them and bring them, and I'll give them all away in Vegas if I can find them, Nick. If
I'll hunt
not,
you down. I'll hunt you down.
what size are you?
Large.
Okay, might be out of larges. You might have to do the XL.
Yeah, XL
All
or a
right, Doc.
medium. I'll squeeze my chest out of a medium. We'll see.
There you go, buddy. Dark, great space. Sorry about the technical problems, but always awesome. And well, how do you want to wrap us up, buddy? All
Yeah,
right.
yeah, I'm really
Dark is.
struggling with my technical issues today,
Oh,
but I had to reconnect through my laptop because my phone just went blank. Um, yeah, what a great space. Thank you everybody for coming out. Really enjoyed it. Um, Started out with extreme talk on hand jobs. That's a first for me. But once we got past that, I think we ended in some good space, and I think it was educational. I think the more we can educate people on what the Federal Reserve is really about, how the scam really works, I think the better off we all are. And by the way, I really do believe this social media kind of component that really hasn't existed in the past is going to play a great role in helping us, um, end the Fed. I really do believe that because as people begin to learn and understand what a scam it is, that we can't even print our own money without paying interest, that's just ridiculous.
well, they said, what was it, Henry Ford? I can't remember the quote, but if people understood how the banking system works, we'd have revolution tomorrow. We'd have riots in the streets. So that information flow is getting everybody to that realization, and that time to insight has shrunk tremendously on any issue, let alone how the whole system works. So yeah, interesting times. Dark, thanks, Nick, everybody, Peg, Kirby, uh, Old Taylor, everybody, Tomer. Thank you guys. We'll see you
Have
again
a great
tomorrow.
day. Thanks,
Have a
Puncher.
good day.
You're the best, man.
See you, buddy.